A very good afternoon to you all and a very warm welcome to the second day of the National Management Accounting Conference 2020 organized by the Institute of Certified Management Accountants of Sri Lanka. Owing to the current pandemic situation in the country, the annual conference this year is in the form of a webinar. Nevertheless, CMA is always concerned about your career development in the business field and has used this year's webinar to make the situation fruitful with an interesting line of thought: Business 2030, Global Impact, and Value Creation in the Next Normal. The first session of today is on the topic sustainability and creating long-term value in the next normal. And on that note, I deem it a privilege to invite Professor Lakshmana Vatawala, President of CMA Sri Lanka and the mastermind behind all endeavors of CMA Sri Lanka, to deliver the introduction for this session.
Thank you, Dilhani. Good morning, Professor Mervin, and
Thank you.
The others are also having some morning, some afternoon, maybe some evening. So we are having an international mix. So today we are very pleased to welcome our keynote speaker, Professor Mervin King, our moderator, Mr. N. Raman, and our eminent panelists who are there today. And it's indeed a very, very pleasant occasion, because today is the second day of the National Management Accounting Conference 2020 of CMA on the theme Business 2030, Global Impact and Value Creation in the Next Normal. Today we are in a different situation with the COVID-19 pandemic, but I really feel that we are doing better than we were doing what we did earlier with the way that we have connected, how the technology has helped us, and also the real cooperation and assistance and the willing acceptance of our invitation by all those who are present here. So I think it's a very, very opportune time, and although with the COVID-19 pandemic, we are really being able to overcome it and then go to the next level. As you know, we had the first day, the two sessions were there. One was on the economy, the next economy, and the COVID-19 impact and navigate into the next economy. That was the first session. And the second session on repositioning higher and professional education in the next economy. So today we have really come to the next normal. The two sessions are on sustainability and creating long-term value in the next normal, which is the session that is on now. And the keynote address will be delivered by Professor Mervin King, Chairman Emeritus of the International Integrated Reporting Council, or the IIRC. And also he was the Emeritus Chairman of the Global Reporting Initiative, or GRI. So today we are combining two, and we are very happy that we have an eminent person who's here, Professor Mervin King, to deliver the keynote address. Now this year we will be conducting, as we did last year, I think Professor Mervin will know, the Integrated Reporting Awards 2020 for the 7th year. I think we are also very, very fortunate that we have a very learned panel from our side on the evaluation, and also our eminent panel of judges, all of them who are present here, of course, together with the one who has really won the award from the inception to come and then win the IR award. So we are very fortunate that we have such eminent people today. And I must also say that we have been really in the forefront of both integrated reporting and sustainability, where we have last year we organized the National Management Accounting Conference on the Sustainable Development Goals Agenda 2030, the role of the professional accountant. And before that, in 2018, where we had a Global Management Accounting Conference on integrated reporting, the future of corporate reporting. And last year, as I said, Professor Mervin King was the a keynote speaker in actually 3 events that we had, and also distributed the awards. So we are very happy that he is here with us today. Today, due to the COVID-19 pandemic, we are able to conduct this conference virtually. If you see, it's a virtual conference, and with a number of our foreign panelists, speakers, and of course, there are also participants from a number of countries. So we are very happy that we've been able to do this, and technology has really brought us close to one another. The today's topic, as I said, will cover both sustainability and value creation, which is something of utmost importance in this present situation, that we need to create value. And as a result of the new activities that has taken place, we find that the companies are really, and individuals and governments are going in to the value creation much more shortly. So with those introductory remarks, I would like to briefly introduce our keynote speaker. I think he is no stranger. He is known to all of you. Professor Mervyn King is a senior counsel and a former judge of the Supreme Court of South Africa. I think he is very well known there, and he is a professor extraordinary at the University of South Africa on corporate citizenship, honorary professor at the Universities of Pretoria and Cape Town, and a visiting professor at Rhodes. He has an honorary doctorate of laws from the universities of the Witwatersrand in South Africa and Leeds in the UK, an honorary doctorate from Deakin University, Melbourne, Australia, and honorary doctorate in commerce from Stellenbosch University in South Africa. Is chair emeritus of the King Committee on Corporate Governance in South Africa, which produced King 1, 2, 3, and 4, and the chair of the Good Law Foundation. He is Chair Emeritus of the International Integrated Reporting Council, or the IIRC, and the Global Reporting Initiative in Amsterdam, and a member of the Private Sector Advisory Group to the World Bank on Corporate Governance. He chaired the United Nations Committee of Eminent Persons on Governance and Oversight, and was president of the Advertising Standards Authority for 15 years, and a member of the ICC Court of Arbitration in Paris for 7 years. So I think many of the areas that Professor Mervyn King has excelled in and really brought a good name, not only to South Africa, but to the world, because he was one of the founders of the International Integrated Reporting Council and the Integrated Reporting. So may I now have the great pleasure of inviting Professor Mervyn King to give his keynote address.
Thank you very much, Laxman. Thank you for inviting me again, and thank you for the introduction. It's always my pleasure to talk in your beautiful country, even if it's only virtual. But I'm always delighted to somehow be back and associated with your organization and with Sri Lanka generally. So in order to just set the tone for my talk, I'd like to go back to the middle of the 19th century and the whole of the 20th century. It was a period in which corporate leaders focused on financial capital, and that model was underpinned by what became known in the 20th century as the primacy of the shareholder. This resulted from judgments of courts in the United Kingdom, United States of America, and other places, which underscored the doctrine of the primacy of the shareholder. And this became reinforced in the 70s by Milton Friedman, whose thesis earned him a laureate prize. And his thesis, paraphrased, is that the sole purpose of the limited liability company is to make profit without deception. So if he were present, I would ask him with respect, Professor Friedman, does that mean even if the company is making profit with adverse impacts on people and planet? And I think he did overlook the fact that companies do not operate in a financial bubble. They operate in the triple context of the economy, society, and the environment. So corporate leaders going into the 21st century focused on increasing the wealth of shareholders. The doctrine was that increase the wealth at the top and it would trickle down to the impoverished at the bottom. Well, the trickle became treacle, it stuck at the top, and it never came down to the bottom. In fact, it was the error of corporate leaders throughout the 20th century to focus on the primacy of the shareholder, because we now know from expedited research, because of the computer age of the 70s, that by the end of the 20th century, we'd reached ecological overshoot, which is the technical term for the fact that in the main companies, to the lesser extent individuals, were using and had used natural assets faster than nature was regenerating them. Clearly not a sustainable matter. And that is now being exacerbated in the 21st century because population is still increasing, but natural assets are decreasing. So we moved from the three criteria of success of a company, which were increased profit, increased share price, if the company was listed, and increased dividends. That was a success. Well, many of those companies who achieved those three criteria were in fact being subsidized by society and the environment, because how the company was making its money was having an adverse impact on the environment and or society. And society and the environment consequently were subsidizing that bottom line. So sustainable business means that the company is making its product or rendering its service, but adding value to the three critical dimensions for sustainable development as set out by the SDGs in 2015, namely the economy, society, and the environment. If how it is making its money has an adverse impact on one of these three critical dimensions, has the company got a strategy to eradicate or ameliorate those negative impacts? And the coronavirus pandemic has shone a light on all this, because it has shown us how critical the S in ESG is, in environmental, social, and governance. From sustainability reporting, we now look at environmental, social, and governance issues. And as the former chairman, now chairman emeritus of the GRI, I know that the GRI was the pioneer on sustainability reporting and has a huge amount of accumulated knowledge. But other framework providers saw there was room in this space as sustainability reporting became more and more important to start new organizations. So CDSB started, Carbon Disclosure Sustainability Board, Standards Board, CDP, Carbon Disclosure Project, TCFD, Financial Disclosures again on climate change, and so on and so forth. So much so that there was clutter and confusion amongst preparers about how to report on sustainability issues pertinent to the business of the company of which they were directors. Well, as chairman of the IRC, my colleagues and I decided there should be convergence in this ESG cluster. And we formed the Corporate Reporting Dialogue under the chairmanship of Ian McIntosh, who'd been the deputy chairman of the IFRS Foundation, and invited these framework providers to talk to see if we could get convergence. And about 2 years ago, at an IIRC International Conference in London, I was fortunate enough to have in the room the executives of the GRI, of SASB, Sustainability Accountancy Standards Board, TCFD, CDSB, excuse the alphabet soup, but I think you know all these acronyms, FASB, Financial Accounting Standards Board of America, IFRS, IASB, SEC, all in one room. And I gave a speech in which I said that these framework providers are seeing themselves as competitors. And I said that GRI and SASB operate as if they are competitors. And yet they're dealing with public interest issues and have got the same public good outcome, namely to make accountability more informed, because you then have the relevance of the ESG issues inside a company having been evaluated, as well as the financial issues. And your accountability is more informed. As a consequence, those in the capital markets of the world and trustees of pension funds can make more informed judgment calls for the benefit of the beneficiaries of those pension funds. And so I said in that speech, it was a social outrage that organizations being funded from the same pond, dealing with public interest issues, saw themselves as competitors instead of cooperating and collaborating under SDG 17, which is collaboration to try and achieve the other social outcomes of the SDGs. And that they should be shamefaced. They should get together to get rid of this clutter and confusion and try and get one standard of sustainability reporting. Well, I am told by many people that this talk galvanized these organizations into action. And we all know now, in the last 6 weeks, the World Economic Forum has issued its metrics on sustainability reporting, working with the Big Four. And about 70% of those metrics are GRI standards and absolutely disclosed in that metrics issued by that consortium. At the same time, IOSCO has said that ESG is critical for sustainable finance, and we need to investigate whether we should get involved in trying to get convergence of reporting under these framework providers. The four main framework providers, that's the GRI, SASB, CDSB, and CDP, together with the IRC, issued a statement of intent to work together. And the IFRS Foundation issued a consultation paper only about 10 days ago, in which they asked the question, isn't it time for the IFRS, having focused for years on standard setting on financial matters where there's great maturity, should they broaden their mandate to include sustainability reporting and start next to the IASB and International Sustainability Standards Board, working together with these collaborators, these five intenders, GRI, SASB, etc., the consortium and IOSCO. And I mean, also fortunate for my talk this morning, only yesterday, an open letter was sent by the five collaborators of working together that they're starting to collaborate with the World Economic Forum Consortium and the Big Four, with IOSCO, etc., to get convergence. So what has happened in the last, since 2010, is that this profit motive has been replaced by a value creation process. And that process is to look at what are the inputs going into a company in order to create its product or render its service. What are the activities inside the company, enterprise risk management, internal audit, All these GRC issues are, in automotive terms, the oil to make sure the engine, how the company produces its product, runs smoothly. And then from the activities, you have an output, which is its product, including waste and other matters. The product then goes out into society, and it has an impact on those three critical dimensions, or the 6 capitals mentioned in the IR framework: financial, manufactured, human, natural, intellectual, and social. It does have an impact, which leads to outcomes. So the accountant of today doesn't sit only in a corner room drafting an AFS according to IFRS in our part of the world, and is not, as was mischievously called, a bean counter alone. He or she gets involved in the C-suite with this whole value creation process. And I have been privileged to be an advisor and a consultant inside C-suites of many companies. And who is the true change maker to change from this profit motive to a value creation process? It is, in fact, the CFO, the Chief Financial Officer, who is the true change maker. So some years ago, it was 2016 to be precise, I wrote my book called The Chief Value Officer, in which I said, is it not time that we accepted to call this financial director a CFO is a misnomer? And really, he's a value officer because he's looking at this whole value creation process and looking at the impacts on the 3 critical dimensions: the economy, society, and the environment. He's also looking at what is the purpose of the business of the company. And purpose is, why does the company exist? It is not prosperity, but with adverse impacts on society and the environment. And so you have this change in thinking to value creation. And IFAC, the International Federation of Accountants, have agreed with me and issued a statement saying that they believe their members in the longer term should be known as Chief Value Officers. And the university, my alma mater, Wits University in South Africa, which I disclose I'm a professor at the business school there, we are starting a course at the beginning of 2021 for CVO, for the accountants who want to apply for the course, which extraordinary number of people are applying. We believed, and I think we will be the first to start, but there are 2 universities in France, 4 universities in the United Kingdom, and a university in Australia that's starting CVO certification courses for accountants and for MBA students that might have focused on financial management in their MBA. So what does this all mean? This means that the world is not what it used to be. We no longer look at the limited liability company, as Milton Friedman did, as a profit-making machine. We often say that society is the licensor of a company. But in fact, if you go back to the middle of the 19th century, what happened was wealthy families started refusing to give what was risk capital to unlimited liability organizations, because when the business failed, they were still liable to creditors and to employees. And so the government of the day, the representative of the people, society, created this incapacitated artificial person called the limited liability company. And the giving of equity capital instead of risk capital. The concomitant was, whilst you have protection of no liability for creditors or for employees on bankruptcy or failure, the concomitant is you are at the back of the queue when there is failure. So preferential, secured, concurrent creditors all get paid first. And if there's anything left over, it goes to the shareholder. And so the question of shareholder activism has also changed. I think you've all been to AGMs where shareholder activists come in, and one of the things they always look at or attack is the question of remuneration of executives. Then they ask questions about the bottom lines issues. But today, people have become value creation activists. There are different questions being asked of the board of directors sitting at an AGM and the chairman. The question will be asked, well, we made 100 million euros, whatever the currency is, last year, but it's not clear from reading the reports. How did the company make this money? Can you please, Mr. Chairman, tell us? Were there any adverse impacts on society and or the environment? What strategy have you got to eradicate or ameliorate those negative impacts? And is this company really adding value to society? That's the critical issue. So the whole mindset has changed. Boards today are thinking on an integrated basis. They're thinking there's this symphony, to use a musical term, between the resources used by the company and its relationship with its stakeholders in producing its product. And those value creation activists want to know how the company is working together with all these stakeholders. And are they taking account of their critical needs, interests, and expectations, but making decisions in the long-term interests of the health of the company? So in summation, I agree with Harvard University that we have changed from focusing on the wealth of shareholders to the long-term health of the company. Because if a board gets that right in the sense of adding value to those three critical dimensions for sustainable development, that's true value creation, which is sustainable. Thank you very much for listening to me.
Thank you. Thank you very much, Professor Mervyn King. I think you really gave us new dimensions into what we were really looking at, both on sustainability and value creation. And of course, the transformation of the CFO to CVO, or the Chief Valuation Officer, I think Chief Value Officer, which is indeed a new thinking that has come. And I'm indeed happy that institutions such as the International IFAC, the IASP, the other international agencies are really have accepted what we have said. It's indeed, I think, a great honor for the work that we have done, and we are very happy that you are here with us, because you have been always supporting us. And I also see that on what you really mentioned, that the management accounting profession has, I think, a very, very maybe a major contribution to be made on the value creation. I think that's one major area, and we are very happy as the professional management accounting institution to hear those, and that our professional management accountants would also go into this field. Professor Mervyn, I think we have our moderator, Mr. Raman, with us. Would you be prepared to take one or two short questions, if it is okay
Pleasure.
by you? Okay,
With pleasure.
Mr. Raman, can I ask you, our moderator who's there, to maybe have a brief one or two questions with Professor Mervyn?
Thank you, Professor, for this opportunity to interact with Professor Mervyn King. We had excellent pearls of wisdom from Professor King, tracing from the past of moving away from the capitalism to the value creation activism. That was a fantastic journey he took us through in just a span of 30 minutes. Sir, one quick question to you, Professor. We would like to be enlightened from being a profession of management accounting body. what would you advise as a strategy for the management accounting profession worldwide? What exactly we should do to align ourselves as value creating professionals, or someone who are very actively supporting this cause and seen as one of the anchors of this change management which is happening? What is the strategy you suggest to us?
Well, the first thing is a mindset shift so that you're not focused only on the financial, because you appreciate we've moved away from that financial capital model underpinned by the primacy of the shareholder. We've moved to this value creation model, which is from inputs to outcomes, so that financial management practitioners have to broaden their thinking from inputs to outcomes and look at the impacts of how the company is producing its product and what impacts its product has on society, people, and planet. And the management, the financial management practitioner is perfectly placed to become a value officer because they have been educated in public interest issues. And that's why I gave that speech and said it was a social outrage to think you are competitors on public interest issues when you should be collaborators, not competitors. And so it is happening. It is happening that all these institutional bodies and IFRS monitoring board at the top, the trustees, the IASB, working with IOSCA now, working with the 5 intenders, as I call them, working with the World Economic Forum, all coming together to try and establish one standard of ESG reporting. So when you look at, that's the context. So you moving, I believe in the next 2 years, we're going to have a comprehensive corporate reporting system. So we're going to have in 144 countries at least, reporting IASB standards, IFRS, and we're going to have reporting on the International Sustainability Standard Board standards, also under the IFRS Foundation. I believe that's the best model, because the other institutions involved in this whole change in the corporate reporting system, let's take the World Economic Forum, as important as it is, they don't have a public authority standing. Let's take the 5 intenders, the framework providers, they're all private sector organizations. Let's take the EC Commission, task force on redefining non-financial standards. I don't like that phrase because they all have financial outcomes, but so be it. The EC is a focus on the European Union, and also it starts creating, can you imagine if they came out with definitions, you still have the GRI and you still have SASB, it would lead to more confusion for preparers. So it's important to get them to collaborate, which they've agreed now to collaborate. So I think the IFRS, because the monitoring board is made up of public authorities. So you look, it's IOSCO, it's SEC of America, it's the Ministry of Finance of China, it's Japanese finance, it's so on. They're public authorities. And so you fall under a public authority which has had a relationship over many years with regulators and governments in 144 different countries. And so you've got this public authority body overseeing this, and it gives it authority. And they have on the ground the national committees formed by the IRC, the national committees formed by the GRI all over the world, working together with IFRS, which has worked and has relationships with regulators and governments in 144 countries. So you've got the structure and the context to really get this as an international sustainability standards board. So I think the correct way to go is IFRS monitoring board, IFRS board of trustees, IASB, and then ISSB, International Sustainability Standards Board. And in fact, I'm writing a paper on that right now, and it will be put on the IFRS website in about 10 days, 2 weeks' time. So I think that's the best for planet Earth. And on that basis, we've got, I think, a chance of trying to achieve the SDGs by 2030, which, as you know, is the timeline for those SDGs. Because then preparers can really focus on embedding the pertinent SSB relevant to the business of their company, like clean water is important to a fishing company, and clean production. So if you like, you can look up Sandford, S-A-N-D-F-O-R-D, a New Zealand company. They've done a fantastic integrated report showing how they've taken, I think it's 3 SDGs, made it relevant to the business of their company, which is trawling and fishing, and how they've embedded that into their business model and to the purpose of the company. So, as I said, the world is not what it used to be. It has changed. And so once it's changed, the very mindset of financial management has to change. And it's got to be looking at inputs to outcomes. So it's interesting that reporting became outcomes-based, integrated reports, that the SDGs are outcomes-based. And that's why I started asking the question about governance. Why do we have a set of rules or principles, and it's becoming a mindless sort of checklist approach to governance? I have a nominations committee. I have a preponderance of non-executive directors. I have so on and so forth. I'm practicing good governance. Well, it didn't follow. But if you have a mindful outcomes-based governance, so I've just finished writing a book which was published about 6 months ago, Mindful Outcomes-Based Governance, the modern approach to governance. And that is, the board is very mindful that the 4 critical outcomes which a company has to achieve for the external stakeholders to look at the company and say, this company has been practicing quality governance. And what are they? Value creation in a sustainable manner. Ethical culture with effective leadership, meaning conscious corporate leaders who understand that the company is an incapacitated person. They're acting almost as a guardian of an incapacitated 8-year-old child. The company, when something goes wrong, the wrath of society turns against the company. But the company is always innocent because it's totally incapacitated. It's its corporate leaders who have erred. Then you need adequate and effective controls with informed oversight. And is there trust and confidence by the community in this company in which it operates with legitimacy of operations? If you achieve those 4 outcomes, it can be said you must be practicing good governance. Notwithstanding that, to do that, we say there's 16 basic principles. If we achieve these principles, you'll get those outcomes. But they're different practices. There's some international practices, like a nominations committee, for example. But for some reason, it may not be apposite for your company. So you'll adopt another practice. And that's why the regime of a mindful outcomes-based is apply those principles and explain your practices. So it's also something that is now going around the world, that you've got reporting outcomes-based, your SDGs, you're embedded into your business model, the Sustainable Development Goals, which are outcomes-based, clean water, clean production, etc. And governance is becoming outcomes-based as well. It should be. So the mindset has to change. And I think from an educative point of view, you've been taught about public interest issues. So you know it's interesting that the what, namely the creation of this body, has become a matter of urgency around the world. And the pandemic has shone a light on this because it's seen how important the S is in ESG, health and safety, human resource. It's shone an absolute light on it. And how does a company act? Has the company actually created an atmosphere of safety for its employees, one of health? Secondly, it's the world is seeing that there is a triple context in which companies operate, not only financial, it's both in economic, environmental, and social. So I think the accountant, in my book, Chief Value Officer, the subtitle of it is Accountants Can Save the Planet. And I had much discussion when the book was issued. Why do you say accountants? Why not ecological lawyers? Why not this? Why not that? I said, because they've got this public interest training. And I've seen they can adjust very quickly. And they are the true change makers in the C-suite. They see this value creation process. So yes, I think you're well placed. And it's a question of, I'm sure your institutions in Sri Lanka will start adopting courses, certification courses for financial managers, chartered accountants, etc. And maybe MBAs as well, to start certification courses on CVO, as is happening in the UK, France, Australia, South Africa. But it'll go all over the world because IFAC has accepted it now.
Thank you. Thank you, Professor Mervyn King. I think we may have to, it's given a long maybe description. I really thought it was only the COVID-19 impact that was really going to have a sort of a change, going to change our, maybe the ways of doing things. But I think Professor Mervyn King has come out with a very much more better idea where the accountants are really going to change. And he's given new thought to us as to how we could go into that on the value creation, on the trust and confidence, on the ethical culture, and many areas that we are practicing. And I'm sure, let me once again thank our keynote speaker, Professor Mervyn King, I think for your valuable time. You always accepted our invitations. I think this year you will have another invitation, Professor Mervyn, that is, as I told you, we are going to have our Integrated Reporting Awards 2020. But I'm sure although you were here last time in Sri Lanka, we can maybe use technology, and your cooperation and your wisdom and your wise words will certainly build the corporate sector and the government sector. But before you conclude, I just want to make one question to you. That is really, we are doing all this for the private sector. But how do you see that we can really get the government sector to create value and show the society that they are creating value?
Well, it's exactly, mindful outcomes-based governance is equally applicable to a state-owned company as it is to a private sector company. Equally applicable to a government department. Equally applicable. So if you look at the King 4 report, the Roman 4 report, we say proportionality is critical. So you take the concepts, and we've done a supplement on state-owned entities. So you can look at King 4, which you can get on the screen without cost. It's a public good at iodsa.co.za. So you can get the King 4 on your screen, and you'll actually see a supplement written for state-owned entities, how they too can adopt these principles of value creation and mindful outcomes-based governance. I believe absolutely they should do it.
Thank you very much. Mr. Raman, you just want to make a comment, I think. Maybe make it short so that we can start the balance panel discussion.
Not much, Professor. Professor Mervyn King has really brought the crux. The management accounting, though it has been parented by the accounting community, I think the new platform for the management accountant should be value creation, and that is where you gravitate towards the chief value officer role. That's what exactly Professor Mervyn King has given us as a new platform. It's really a visionary statement, and we need to travel a lot in creating framework towards that. That is the sum and substance and short and sweet of what Professor Mervyn King has told us.
So thank you very much, Mr.
Right.
Professor Mervyn King. And you want to say anything final, Professor?
No, I just want to thank you. And I wish you all good fortune for the rest of your conference.
Thank you very much, and we very much your presence today as a keynote speaker and the new ideas you have given us. So we know that there are new challenges, the new term that was given to us, the CVO, and I'm sure we will work towards that, and we will also get your assistance in trying to maybe put into practice what you have today delivered. So with that,
I'm always there to help you, Lakshman. You know that.
thank you.
Thank you very much, everybody. Thank you. Goodbye.
Bilhani, can I now hand over
you,
to
Prof.
you to introduce? Yeah. Thank you, Professor.
Next agenda is a panel discussion moderated by Mr. N. Raman, Advisory Council member of CMA, Sri Lanka, and a past president of SAFA. Joining us as panelists are Professor Graham Terry, IIRC Ambassador, Dr. Aditi Haldar, Director, GRI South Asia, Professor Samanthi Senaratne, Professor of Accounting at the Department of Accounting in the Faculty of Management Studies and Commerce at the University of Sri Jawaharlal, Sri Lanka, Mr. Suresh Gunaratne, Director, CFO at DEMO,
I think, Mr. Raman, you can take over now.
Okay, thank you, Professor Lakshman. I know that we are running off our time. Let me start the subject straight away. We had an excellent keynote address by Professor Mervyn King, but a small tweaking I would do to come straight into our session from what he said. Now, we are going to focus within that. Since this pandemic has created a new normal for all of us, we are completely in a new environment than what we were somewhere in March of this particular year. So though sustainability and long-term value creation had always been two important perspectives in our mind, and we have always been focusing on that. But what is it new in these two is precisely the theme of this session. Very intelligently, Professor Lakshman, along with his advisors in the Institute, have brought in very correctly this topic. And we have got a very illustrious set of panelists who are going to speak on this to us. But before I request them, a quick word about this theme itself. We all know that a tremendous erosion of values have taken place globally after this March 2020 pandemic spread. We are noticing everywhere that there are things which have changed our lives, and there are oxymorons also happening. Right now, we know that the production of many goods and services have stopped and are very slowly crawling back to normalcy. And the oxymoron is, while there is production has come down terribly of, let's say, vehicles and motor vehicles and automobiles, there is a spike and a spurt in demand because of the mobility solutions which are now required. Automobiles are yet to scale up their production, but now we find a huge demand for the second-hand vehicles or the used vehicles, as we call it globally. And there is a terrific spike in demand for two-wheeler vehicles in India. And they are all, the two-wheeler automobile companies are all raising up their capacity utilization. This is the oxymoron type of situation. But at the same time, this sort of situation has also been disrupted by the value chains, the working norms. People have not come back and resumed the work in the normal way. And even if they have come, there is a social distancing norm. So all these things have all created a new normal for the business. So in this sort of new normal, what we are now seeing when compared to what it was in March 2020, in this new normal, what all we have learned on sustainability and value creation from pundits like Aditi Haldar and pundits like Samanthi and experts like Lakmika, Graham, and practitioners like Suresh, how the life has changed in the last few months commencing from March. And do we have a new lens to look at the sustainability and long-term value creation is the crux of this particular session. So having anchored that the need for a new lens is required for sustainability and long-term value creation, I would now request each of the panelists to speak or 5 minutes because of the time constraint. We would listen to them first. What do they have to say to us? And after all of them speak in turn for 4 to 5 minutes, I have a set of questions where I will pose and invite specifically our panelists to address them so that additional clarity we gain on this new particular lens required on the same old terminologies of sustainability and long-term value creation. Since the sun rises first on Australia, I would request Lakmika first to come on screen and tell us about his perspectives of the sustainability and long-term value creation in the new normal. I would request very much the panelists to restrict to the 4 or 5 minutes game plan which the professor has given us, and I'm sure they would give me the liberty and luxury of intervening when slightly the time goes out of control. Thank you, Lakmika.
Absolutely, Mr. Rahman. I'll be well within the time frame. So what I want to talk about is from an Australian context, what we've seen from this virus is how post-virus is how different states have been affected differently. So different states have come into this game in a slightly different manner and affected in a slightly different manner. And what's happened is there is a view of sustainability, but more of an internalization, what you call internalized sustainability is what's coming and emerging. So many countries, many organizations have closed their borders, have closed their, even within Australia, they have closed state borders. So what's happening is because of this, there is this view of self-sustainability, which is what most of our countries, India, Sri Lanka, and some of the SAARC countries were pioneers of thousands of years ago, self-sustainability. So I think what's happened is when we look at globalization, if you look at it in one context, it's good, but on another context, there has to be a balance as well. So what's happened is globalization without a control has led to a very significant eroding of the global balance. So what's happening now is I think COVID is neither a negative or a positive. I don't look at it as a bad or good. I just look at it as what it is. It is a catalyst. So if we look at it from that perspective, I think what we can understand is that it is a necessary catalyst for change. And in that perspective, what's happened is due to this naturally occurring effect of a pandemic, what's happened is countries have recognized the importance of internalization as well. If you look at Australia, most of us, our production lines have been moved to third world countries. Now, is that a positive? There was this big debate about bringing manufacturing back into the country. So in that context, we need to look at sustainability in a balanced way. I've always promoted a balanced approach. I mean, there are certain things that we can import, yes, but also we have to look at not completely outsourcing everything and then, tipping the balance. Everything has to be a balance in life. I mean, if you look at the great teachings of all enlightened philosophers, Lord Buddha, Lord Ram, and all these people, they've always promoted the balanced approach, the middle path. And I think as a nation, as a global human race, we've actually lost that particular balance. And I think this pandemic is bringing things together in terms of bringing that balance back into society. So, so my takeaway on this is to consider internalization as opposed to globalization and always have things in a balance. And I take Australia as an example. Even now, certain states are closed off to other states. And even within the country, we have restrictions on travel. So because of that, we must look at sustainability and see, okay, if this is going to be the new normal, how do we manage sustainability in a more balanced manner? So I think I'll stop there, Mr. Rahman.
Thank you, Lakmika, for that perspective. In fact, that's what the Prime Minister of India has called by its new name, Atmanirbhar Bharat. So how do we internally become sustainable first? That's a very good perspective you have brought. So that now very correctly leads us to invite Dr. Aditi to come on screen and share her thoughts on what would be the new view of long-term sustainability and long-term value creation through after this outbreak of pandemic. How would you look at this?
Yeah. Thank you. Thank you, Mr. Raman. Am I audible?
Yes.
Yeah. Okay. So I think I will, this is my personal view, and what I understand that the pandemic is, as just Professor Pereira also mentioned, that it is a catalyst, right? And I think we have to really, really understand that the industrial age has shifted to the information age. And that means that there is blurring of boundaries between the physical, the digital, and the biological worlds. So this was not, I think this discussion has started maybe 4 or 5 years back, but I don't think that as societies and as business entities, we were really understanding this change and this shift, which was already happening slowly. Yeah. And what happened with the pandemic is that it has catalyzed this blurring of boundaries between
True.
physical, digital, and biological worlds.
True. Very true.
Now, another thing which was demonstrated because of these, pandemic is that we all realized how much we are dependent on each other. Yeah, so it's the one planet and humanity, people at the center, and our health systems, our food systems, and our supply chains. We are all dependent on each other. So this is the moment to, I feel very strongly, is to rise to this challenge and bring that collaborative leadership. So to bring back to your question, Mr. Raman, about sustainability and the new definition, I don't think we will really change the definition of sustainability in this, after the pandemic. But what we really need to do is to really put that understanding into action. That means we have to accept that we have moved into the information age. There is this blurring between the physical, digital, and the biological world. There is this planet that is only one, and we all need to coexist, and we are dependent on each other. So this is very, very important realization that how much, how many conferences we do, how many global events we do, how many brainstorming and discussions and consultations happen, and most of the time it is about blaming each other. That will not work now. We have to all become responsible wherever we are, and therefore responsibility means that we need to really take action on how we reset, how we redistribute, how we regenerate, and how we restore. And what do we need to do in that? I think we really need to bring people back in this whole change of reset, redistribution, regeneration, and restoration. Because most of the time, I feel that working with GRI as a standard setting body, working with organizations across the world, from business to governments to different institutions who come together, I feel that somewhere we focused more on the frameworks, the numbers, the pictures, rather than putting people at the center stage. So this new normal, as you mentioned, I think it is time that we design, we take decisions, and we take action, keeping people at the center. Yes, from my side so far, Mr. Raman.
Thank you so much, Aditi. I think you have brought an excellent perspective, further spinning on what Lakmika said. And crux of the takeaway from your initial opening remarks is that, so enough of the conference level talks, let's get down to action and translate these good ideas, what we have learned, into action. So it's people's turn now. And that would mean people will have to bring in reality what sort of learning they have done earlier, bring into reality. So people content becomes very important. So this is the right time where we can listen to Professor Samanthi as someone attached to the educational institutions, how this reality of making people understand either through the education system or any other way, how to make this possible. So an educational perspective from Professor Samanthi becomes very relevant now. Professor Samanthi, can you come online?
Yes, am I audible to you?
Yeah, very much.
Right. Thank you, Raman, and thank you all of you. Yes, I think, in fact, I wanted to share my thoughts from the university education perspective. In fact, with the outbreak of COVID-19 pandemic in the country and the subsequent lockdown that we were experiencing in March, so we had to, all of a sudden, we were compelled, the Sri Lankan universities to change into digital learning platforms. So prior to that, we were mainly focusing on face-to-face delivery, which was supported with learning management systems and various new technologies. But this really changed the situation, and we started delivering real-time lessons to students on virtual learning platforms and giving them online student support. But at that point, so in a way that brought flexibility to the students in their learning, because they were learning from their homes or from their familiar environments. On the other hand, that created a challenge to keep these students motivated and self-disciplined to involve in the learning process. And also the lecturers, the academics, had to learn quickly to respond to these new technologies, because all of them were not prepared to involve in such a situation. And further, Sri Lanka being a developing country, there were problems as to the access to technologies, infrastructural supporting infrastructure. So all those were created challenges to us. So initially, our response was rather a firefighting approach, because now the universities were suddenly closed down. The schools had to be closed down. So we had to find a solution to respond to that situation with these virtual learning platforms. And also, we had to manage the students' problems in relation to health and safety. So in that, within that context, we were working. However, I think this has created an opportunity for us now. So sometimes we can say COVID-19 is a blessing in disguise for us to rethink our role in the universities, the role of the universities in a country, because now we can think how the digitalization can be used to expand and complement the educational processes. And when you want to change the process of education in any educational institution, that would definitely require a transformation in the structures, systems, and the controls that we have already established in our institutions. So rather, in a country like Sri Lanka, we have a siloed approach in organizations. Now we have to relook at the connectivity in the various functions, divisions in the university, in order to respond to this transformation in the educational processes. And this would also require expanding our talent pool, particularly both uh, reskilling and upskilling of the students as well as the academics. So they have to learn new skills to suit their redefined roles in the organizations, as well as they will have to make their roles also be redefined in the organizations. These students, when they go out as graduates, so their roles will be redefined in the organization that will demand a different set of skills. And so these are the main opportunities that this pandemic has created. So my view is, in order to respond to this effectively, we need to have a long-term strategy. We cannot do patchwork. No piecemeal approach will work. So the educational institutions should develop a long-term strategy, whereby to give a strong direction to all actors who are involved in this process. So that strategy should be complemented with the advanced technologies, the right set of talent, and in this case, the universities and the educational institutions can contribute big way through their research and development activities. So because now we have to think creatively, think differently, out of box thinking is really essential. So that new knowledge that we will be generating will be helpful for the universities as an educational institution to improve their education processes, as well as to contribute the business organizations to look differently, do things differently, both I would say in the private and public sector. So in the today's context, our operating environment has changed. Now we have four important factors to deal with: environmental, social, governance, and data stewardship, because extensive use of technology in all our activities. So we need to have integrated thinking more than we used to have in the past in order to create sustainable value creation. So that requires good leadership and proper governance systems as well.
Thank you so much, Samanthi. That's really a brilliant spin on and further extension on what Aditi said, that the people factor would really come into play with the technology as a differentiator, because there is no other way for us. And fortunately, technology is also maturing, but for which today we can't see the blending of so many panelists and participants here from across the world. So coming to the technology aspect, in fact, technology as a differentiator of the new environment and also as a tool for the business has started rampantly and significantly last few days. Very recently, last week in India, we saw the launch of a new platform of room air conditioners where virus deactivation technology is being built in as a part of the air conditioner without not much of an additional price. A new generation of air conditioner with technology built in has started coming from the new business environment. So because of this, the role of the new business is going to be tremendous, as they need to imbibe this technology as a differentiator in the products. And that brings us this questioning, this particular expectation from our panelist, Suresh Gunaratne, who comes from an industry which is known for its role in integrated reporting. Suresh ji, can you come online and tell us your view on how the business is going to look at this new environment?
Thank you.
You're audible.
Yeah. Okay. Thank you very much, Mr. Raman. First of all, this title of this session looks to be a classic example of integrated thinking, sustainability, and creating long-term value in the next normal. Because you're talking about the interdependencies and connectivity between sustainability and long-term value creation. That's just an observation. To start my what I have to say, I'm expected to speak about
maximum 5.
Yeah, I'm expected to speak about from a firm's point of view or from a company's point of view.
Yeah.
About this topic about ESG or sustainability, there have been a lot of research. There had been a lot of discussion. Recently, I read an article from a Harvard professor, Professor George Serafim, where he said, according to one of his recent studies, organizations that practice ESG on a strategic basis outperformed their benchmarks during the initial COVID period. So that says something to do with strategic CSR or whatever you may call it, where sustainability is part of the competitive story. So actually, there are more reasons why a firm look at sustainability from a point of, if you are there are green funds who invest for ethical reasons, and also they may be still doing it, because I read we try to establish a connection through regression analysis. They are trying to establish a connection between non-monetized aspects and the profitability. So then, okay, now we all say, okay, we have strategic CSR, we have sustainability on a strategic basis. This same professor is saying, if you want to be strategic, you have to embed it in your competitive strategy. That means now, like Michael Porter once defined, operational effectiveness is performing similar activities better, and strategy is about being different. So he says, when you have a phone and if you have a nice cover to it, it only adds to the protection of the phone, but it doesn't give you anything else. So when you look at strategic sustainability, it has to come from a competitive advantage point of view. So then what can, I will just quickly touch upon a few things that a company can do to make this happen and the advantages. If you want to have sustainability embedded in your competitive strategy, you need to find your battlefield. You need to find your story. So just doing a sustainability report or collecting data about sustainability and analyzing is not going to help. For example, say you take Airbnb model, there is a fair amount of reusing of assets. Say body shop, we all know. So you need to build competitive advantage through sustainability in the long run. Now, as a company, we also have products, sometimes, I must admit, sometimes harmful to the environment. But I think with the current offering, we all have to see how sustainable practices can drive us to advantage. So while it is necessary that we have to do a lot of things, I'll take another example. IKEA recently, they have now, earlier they used to come up with a lot of things where you buy, use for a little time and throw. They have completely changed their strategy to make long-lasting things. So that's a good exponent of sustainability as part of competitive strategy. Then companies have to have accountability structures in ESG. Otherwise, without accountability, we know nothing will get done. Then you need to build the culture around the corporate purpose. First, the corporate purpose has to recognize that sustainability is a value driver for long-term value creation. Then you need to create the culture that is needed for it. So like this, there are several things that an organization can do. Another thing is make the necessary operational changes to enable execution of the strategy. Say, for example, having objectives, workflows that support sustainability, KPIs, evaluations, reward schemes, and so on. Then there has to be a firm commitment to transparency and relationship building with investors. Just reporting data is not enough, or giving a sustainability report is not enough. As a company, we should not package our activities with a good sustainability related data and then say we are good boys. But it has to be there in the competitive advantage. So there are many aspects. I just mentioned a few things as companies, what we do to gain competitive advantage rather than operationally doing certain things which conform to corporate responsibility. Then let us very briefly, in a minute or two, let's look at the advantages. So this pro-social approach of an organization surely is going to enhance employee engagement because there is congruence of the values of employees with that of his or her employee. So naturally, when there are engaged employees, you can expect enhanced productivity. Say, if you look at from a customer point of view, transparency improves trust. So that helps even on your revenue flows and so on. Then the positive impact on the brand equity of the organization. Definitely, it's like Professor King said, it enhances corporate valuations. License to operate. Now, I'll give an example. There are certain areas that where there is a lockdown now, but companies can operate, factories can operate. But if you are doing it, we have to do it with responsibility. Just because the government permits you, you should not do it, because you will lose if you mishandle the situation. You will lose the license to operate. So, and also robust governance structures give way to robust business models. That means where everything becomes predictable and there is clarity about how things happen. So investor preference, I was talking to you about green funds. So in the West, I think this is very prevalent. Then shareholder confidence on the board. If the board is committed, if the shareholders know that the board is committed to good ESG practices and the strategy is driven by them, that is going to enhance the confidence on the board. So, and ESG practices are part of actually long-term strategy, because they focus on creating value in the long term. So finally, we have to see how many companies have been able to create long-term value using ESG. Just doing a sustainability report is not enough. Actually, your guess is, as I don't know how many have done, your guess is as good as mine. Why enough companies have not done is something we have to look at. I believe it's because of the prevalence of short-termism over long-term value creation. Actually, that is what Professor King was also trying to emphasize. I think as organizations, we need to have more focus on long-term value creation over short-termism. Thank you.
Thank you, Suresh. Your words have truly represented you or presented you as a chief value officer, what Professor Mervyn King was just now highlighting, and how the technology differentiated people should focus more on strategic thinking and not merely operational efficiency. And that is how you have echoed all the thinking so far. Now, all these words of four of you must be really music to the ears of the ambassador to IRC, who is going to speak to us now. From an integrated thinking perspective, these words must be really a music for Professor Graham. So Professor Graham, I request you to come online and tell us, how do you feel about is there a new way of looking at sustainability and long-term value creation after this pandemic breakout, particularly from an integrated thinking perspective? Professor Graham.
Thanks very much. I agree with you. I'm actually smiling to hear what people are saying, and hopefully what I will say will connect some of this. I agree with the concept of COVID being a catalyst. That's how I was going to start my presentation. I think it ushered in a new paradigm for doing business earlier than we could have expected. But I believe it was inevitable. It was going to happen. And it was really the catalyst that has sort of brought it to our attention. And we've heard a lot about the changes that are taking place in the world today. So what I'm going to focus on is just a little bit on integrated thinking and how organizations maybe should be trying to face this change that needs to take place. I think we all agree that organizations need to operate differently. Organizations need to be much smarter and more agile. Tardy thinking and casualness will not be good enough going into the future. Organizations need to understand how changes in the external environment are going to affect them both directly and indirectly. This is not about guessing. It is about genuine intelligence gathering and astute interpretation. Organizations need to prepare for different future scenarios. I've looked at the most recent integrated reports of many healthcare organizations around the world. Yet few, if any, predicted a life-threatening epidemic like COVID-19 or prepared for one. This is despite warnings from the World Health Organization and 4 other serious epidemics that attacked the world over the last 10 years. I believe that if organizations want high performance in the future, they need or they want to survive, they need to adopt integrated thinking and embed it in their DNA. So how do organizations go about this? Simply put, they need to address the following areas. Organizations need a governance structure and mindset that increases and enhances value creation, not just one that focuses on compliance. They need a well-defined and sustainable business model which links to their purpose. They need a robust and intelligent process for scanning and evaluating developments in the external environment to enable the identification of opportunities and risks. They need to understand that in their value creation activities, they use and affect various forms of capital and not just financial capital. They need to look at and plan for the short, medium, and long term using different possible scenarios, because it has become much harder to predict the future. In doing so, they need to ensure that they are accumulating or have access to the necessary capitals for ongoing value creation. They need to understand the connectivity of all issues as well as the interdependencies between external and internal actions. They need to recognize that they can only create value in concert with their key stakeholders. And they need to build strong relationships with them. They need intelligent information systems, management information, which Professor King has highlighted, providing key information to management and the board about internal operations and external developments. And they need to build the SGDs into their strategy. So if organizations do not change and adopt integrated thinking, I think they're going to find it very difficult to cope with the new normal. Thank you.
Thank you so much, Graham. You have very nicely brought out the emphasis and the sincerity with which integrated thinking has to be now put in place, which in a way combines all what the earlier speakers said. The takeaways were, let us treat COVID as a catalyst for change. It is not an evil nor it is good. It's really going to be a real catalyst. And that catalyst is going to work well in an environment of self-sustainability approach, which Professor Lakmika was emphasizing. And that could really happen if people get down to action with technology as being a differentiator in the new environment. And all these things will have to be placed in the context of the integrated thinking and not purely an operational improvement. This has been the very nice takeaway from all of you. I think we have time for a couple of questions to pick the brains of these panelists, coming from or as a corollary from the 5 minutes presentation each of them had. But two of the questions what I had in my mind, we have already posed to Professor Mervyn King himself. So I would like to remove that. And I have got only 4 or 5 questions to be asked within a time span of, let's say, 20 minutes or so, because we need to give time for the audience also, or the participants also to ask questions. I will first describe the question and then invite the panelists, 1 or 2 of them, to answer or give out their thought process on that. My first question would be a slightly different, and it's a little bit descriptive. The pandemic has seen a sudden disruption in demand, and there is really a care about we should not be recklessly consuming. The amount of recklessness we had in consumption has to be brought down. The conspicuous consumption has to go away. If these were all the lessons learned during the pandemic, what is going to happen post-pandemic? I'm just anticipating there will be a lesser demand for sophisticated goods. World, if it is going to be simpler, we would not see a future business strategy of scaling up or producing more or technologically sophisticating more products. That is not going to be the order of the day if pandemic is going to have its impact on the businesses world over. If that is going to be the order of the day, then scaling up in terms of strategy cannot be adopted by businesses. If scaling up cannot be done, then where would be the investments going in? What sort of business strategy would come up when scaling up for sophisticated products or increased quantity of automobiles or any other products will not be encouraged by the consuming public. So what would be the business strategy? This would be my first question. I would request Lakmika and Aditi to respond to me on this for the benefit of the audience. Lakmika first.
I'm happy to, as a lady, for Aditi to go first.
Okay, Aditi.
Okay, so so I think, I will, Mr. Raman, I think the question is very, very pertinent, but I would like to really pick up on one word that you have used, and I was listening very intently. The word is sophisticated products. Yeah. So, to me, I think even any product which is not in the mass market, which has environmental responsibility integrated into the resource, the manufacturing and the use of the product and the after use of the product, would you call it as sophisticated? That's the question, because in our kind of countries, something which is more environment friendly, more responsibly created, it is seen as having a large difference with the mass market product. So my question therefore to myself is that how do we really describe sophisticated products? And now is the time. I think this is the new normal definition, if I can use that term, is that we don't have to term environmentally responsible and socially responsible products and services to be sophisticated. Yeah. And how can we do that? Only when companies and startups can really invest and bring the investors and the capital flow into creating these products and services which will not actually bring in danger to life. So that's my first point here. And I think we really need to give a serious thinking and take action on this, that sophistication is not about actually having greater responsibility. Yeah. And we need to really move the mass market to have, if we call them sophisticated, then the mass market should have those sophisticated products as the mass market product to be used everywhere. Yeah.
Brilliant.
That's the first one. The second one is that I think in this situation, the center, piece is trust. How do we trust, the producers or the creators of products and services that they are giving the best? And this trust will not come until the change in culture within the organization happens to manifest them into the market and the market decision for choosing their products and services. So the second point is the trust that needs a lot of change and lot of mechanisms and lot of demonstration in the market. Yeah. And the third thing I feel is that after all, whether we take the financial professionals or we take the management professionals, we take the sustainability professionals, I think these boundaries will have to kind of, be removed, and people within the organization have to come together to create that value to the economy and to the people. The more we create kingdoms within organizations, sustainability will not move to understanding the financial parameters, and the financial, accountants and specialists, they will also not understand what is the value of environmental and social responsibility.
Brilliant. Brilliant.
Yeah, thank you, Mr. Raman. So just adding to that, and from a slightly different lens, now there was an old saying, I'm sure Professor Lakshman Watawal will remember, there was a secretary a couple of generations back, particularly during the time of my father-in-law, who was also a secretary in the ministry, that there was an initiative to plant a jack tree and a coconut tree in every town in Sri Lanka. And that itself provided them with all the food that they needed to live a reasonably good life. That's internalization. So a product, as rightfully Dr. Aditi said, does not have to be complicated, but should make use of the surroundings of a particular area. For example, let's look at housing development. Okay. Now, if you look at real sustainable housing, in a Sri Lankan context, we have coconut trees, which is a source of all these different raw materials. We have mud, we have bamboo. All these things, if you get together, you can create a unique product which can be marketed to a large market. I mean, they have made multi-storied structure from wood and from sustainable products that are ecologically friendly. So we must not look at sophistication in terms of, technology alone. Sometimes, you don't need significantly advanced technology to solve a simple problem. We have to use local knowledge, local know-how. For example, little things goes a long way, little products, little innovations. I saw on a LinkedIn video another day in India, actually, this man had actually created a cycle-based water pump, which is very relevant to that particular, so for that particular town. So we must also not just look at technology, but the right technology for the right job and the right product systems for the right job. So coming to that, let's talk about these organizations. I'll quickly stop after that. If you're looking at even these multinational organizations, because of the concept of this current pandemic and what the new normal is going to be in the coming decade, I say the coming decade because the repercussions of this is going to be felt for a long time to come. Organizations also need to compartmentalize while still having that integrated thinking concept, still look at what is best in each jurisdiction or each region that they operate in. So it's about integrated thinking, but taking it to the next level of integrated thinking and looking at what is relevant in that particular part of the world where they operate in. And that is the epitome of integrated thinking. And not just doing it one way, but doing the right way. For example, if you look at an integrated human body, my mind, my brain, my face has a function. My arms have a function. My legs have a function. It's just like that. I can't ask my hands and legs to do what my head does. So that is the concept of integrated thinking that we need to take forward in the context of what you mentioned. Thank you.
Thank you, Rakmika and Aditi. I think sum and substance is back to nature is not sophistication. That is going to be the reality. So we need to look at how do we do business without disturbing the nature. And that means back to nature in your business models. In fact, I am forced to recall, though as a paucity of time, when one of the famous toothpaste companies advertised a few months back that it has to be purchased by customers because it has got salt in that. Someone close to my grandma's age started laughing at that. She started saying, this is what we were telling 20, 30 years back, that we need salt in the content of your brushing the teeth. So that is again back to nature and looking at what is relevant for our environment. Now, my next point would be, if post-March, so my emphasis to Samanthi, Graham and Suresh, post-March, if organizations will have to migrate to a new normal in their business model, if organizations will have to migrate to a new normal in their business model post-March, what do you think would be 3 perspectives which are on the top of your mind that these organizations should embrace these 3 top perspectives so that they work towards this change? I would invite all 3 of you to respond to this. First, Samanthi, then Graham, and then Suresh.
All right, thank you, Raman, for the question. I think, so organizations, I think firstly, the most significant 3 elements of new normal, in my point of view, they have to understand the changing operating context first. Because with the COVID-19 situation, with this pandemic, our operating environment, operating context has changed significantly. So some of the things like working from home and distance working extensive use of technology. These things have become the critical aspects. So we do not know how long we will have to work like that, but that will become a norm. Therefore, this changing operating context, they will have to understand. That is the first thing. The second thing is, with this change, now there's a growing materiality of the ESG and B, opportunities and risks. So yes, E is the environment, S social, G the governance, and the data stewardship. So in my point of view, I think now with this distance working from home, so all these changes are bringing data into the forefront of any organization. Now we are using advanced technologies, digitalization, with all that, the data security, so many new technologies, control systems have been changed. Therefore, the data security, cyber security issues, all that will come into the forefront of organizations. Therefore, it is not just the ESG, but ESG and D related opportunities and risks that the organizations will have to face. Another point of view, this corporate, that I think Professor Mervyn King also emphasized this factor, this corporate citizenship behavior of organizations. So probably all these sophistications, new products, new way of life, and so many new developments that we are talking today sometimes may not be really required. So we have to read so the business organizations have to see whether they are really responding to the needs of the environment, needs of the society, the needs of the stakeholders. So this corporate citizenship behavior is a necessity that we need to relook at this point. So in my point of view, these are the three important aspects in this next normal, the COVID-19 situation. So yes, thank you. I hope others will add to that.
No, thank you, highlighted correctly. Suresh, your view on the top three things which are important for this migration to take place towards the new normal. I think Suresh, we have lost track, or Suresh? Graham, can you come online till Suresh comes back? What do you think top three perspectives which are required for organizations to achieve this migrations towards this new normal?
Well, I agree with what Samanthi was saying, but I think the most important thing around the business model, and we've seen organizations during this period having to adapt and change their business model. So the first thing I would say is that the organization needs to understand its purpose, because the business model needs to be built around that purpose, and it needs to define its business model very carefully. I think a lot of organizations have business models that are vague, and that doesn't help them greatly. I think also in looking into the future around business models, one of the things that comes out to me is the natural capital that is used by organizations is far greater, and the impact is far greater than many realize, because we tend to value natural capital, things like clean water, clean air. We undervalue it. And I think organizations are going to have to take that much more into account as they go into the future. And also something that's interesting, we talked about using natural resources and so on that are produced locally. And I think that is very valid when it comes to manufacturing type things. But organizations will also see greater competition, I think, internationally coming where services are provided, because you can provide services through technology. So I think that's just a couple of thoughts on this, and I'm sure that you want to get Suresh's views as well.
Thank you, Graham. You have very rightly touched, because from what you said, we have got a direct link with the propagating the environmental management accounting tools. They should come to the forefront now and be practiced very significantly. So, Suresh, I would love to move on to you and listen. What do you think are the top 3 perspectives which are required in organizations post-March to move towards a new normal? What they need to be doing as the top 3 to move towards a new normal?
Yeah, I
connectivity issue, I think.
Graham mentioned one of that disruption can happen. Are our business models to such changes that take place? For example, from a supply chain point of view, from a human resource point of view, can they participate in their normal day-to-day things? So then comes the importance of business continuity plans, actually. So first is you need to have a model that is flexible, that can change, and then you need to have a business continuity plan to face any kind of disruption. I'm not only talking about COVID-19, I think that has made companies realize. And no sooner we opened up last time, that is one of the first things that we started looking at. That is, in case it happens again, or in case something similar happens, what are we going to do? So it's not only the business model, also how we have organize ourselves to execute our business point. The last point I would like to mention is because now, as I said earlier, where now like ESG driven companies have advantages because it's perceived that their capitals are more robust, more strong, and their value creation ability is better. At the same time, opportunities that, like we saw, came up, and as a firm, as a conglomerate, we also saw a lot of business opportunities, especially in the areas of after service and so on. So again, to sum up what I said, so disruption can happen anytime, and your business model and the execution has to be ready. Then you need to have a good business continuity plan and look at the opportunities that may be available due to the disruption. So that's what I can say in short.
Thank you, Suresh. I think a little bit of disruption on your, I think IT connectivity is also that we are not able to get some of the sentences smoothly, but we got the crux, in fact. And
I'm sorry, there is rain in my area, so that may be the reason why.
That may be the reason. So this is one of the problems we are facing. But as you rightly said, the flexibility in the business models is going to be the new dimension, what people are going to look for in the post-pandemic. And the one most important thing, what you said, business continuity plan, which was even earlier as a ISO standard, but now I think you need to look at it more seriously rather than look at it as yet another ISO standard. We need to look at that very closely. Now we have got 15 more minutes towards the end of this session. Subject to participants as putting up any questions, I have got only a few set of questions are there, 2 or 3, but only one I would like to pose and then request Lakshman to check whether any of the attendees have raised any point. So my last question would be exactly to go the opposite side, swinging on what Samanthi said in terms of digitization, etc. Post-pandemic, every organization is now adopting by the technology adoption. They are looking at digitization, work from home, less travel. So it is now a reverse swing is taking place. You are moving away from the workplace and it is being taken away by the digitization, work from home and things like that. If this extreme swing takes place, A new type of problem should not come later on in the next wave, where we keep telling because of this digitization and work from home, all these issues only came. How to factor that situation in the future sustainability frameworks or the integrated thinking conceptually? Since it is a conceptually a teasing question, I would like Aditi and Lakmika to respond to this. Aditi?
So I think, as I mentioned that, in your the last question that I responded to, I think work from home will be also that new set of monitoring and reviewing systems will start, and productivity will be not, I think, cannot be measured with the number of hours that physically a person is present or not. For example, I think I also go to the fact that, ILO may also like to see how many hours of work are actually people putting in, because it is not 8 hours these days. It is much more than what we have been doing, because we are trying to adjust with our family, our domestic responsibilities, our different demands in the same space that we share with our family, and yet we are trying to work. And then the availability of internet and electricity, all that is very maybe not so difficult in the major cities of countries like India and Sri Lanka, but I'm sure we have rural areas where electricity and internet availability is still kind of taking ground and becoming more steady. So the monitoring and reviewing, and also actually how productivity of every human being will be measured, I think will go through some change. And I think managers, if we look at managers' role on being the supervisor of different kind levels of work, I think that will also change. It will be more based on, I think, outputs and impacts. So as Mervyn, I think, mentioned about impacts, I think the change that we will all need to bring in, not as just managers, but also people who are reporting back to the organization, that we also need to understand that, I think Graham mentioned that what is the purpose? It's not just the purpose in the organization, but also at the individual level. What am I contributing to in the larger, scale? I think that will become more apparent. So to me, I would say that, trust will be even, become a very, very important, aspect. Second is, how do you measure the productivity of each individual? And the third is that accountability and responsibility to really, contribute to the larger purpose of life and the business or operation that I am being responsible to will actually change. So that is how I look at it. It will not be like number of hours maybe, but it will be really about impacts and outcome.
Thank you, Aditi. That's very nice.
Just maybe another 5 minutes we need to.
Yeah. We are aware of that. We're just structuring accordingly. Lakmika, response?
Sure. So I'll be very, very succinct in my answer. So I fully agree with what Dr. Aditi said. In adding to what she said, there are a couple of other factors that I would like to bring into the consideration of the panel as well as the attendees. Things are not going to be the same again. I mean, we are not going to have 9 to 5 jobs. We are not going to go back to work. There will be work from home. And also, I think there'll be a better return to work-life balance in terms of working from home. My wife, for example, said she's never going to go back to work again the way she did before COVID. I mean, she says she wants to work 3 to 4 days from home. And she appreciates that. And I'm sure, like many others, most professionals are in the same boat. They would prefer to not necessarily travel, which adds to pollution, which adds to congestion, which adds to many other issues. Now, look at this. We are connected on a digital platform from different parts of the world. We have South Africa, we have India, we have Sri Lanka, we have Australia. I mean, isn't this a unique example of the future of how work should be? Yeah. In saying that, there's a negative side of it as well, because the moment that you start working from home, there are cost aspects that transfer from the employer to the employee. For example, electricity, heating, consumables, printers, papers. So how do we manage that? So that is also another aspect that we need to consider in this new normal going forward. I will pause at that. Thank you. Thank you, Mr. Ram.
Thank you, Lakmika, so much. And in fact, I would sum up on this particular response from both of you, sharing my good thought that my productivity has tremendously gone up post-March despite my problems in eye condition. But on the other hand, it has also put a strain on my eyesight now, because half of the time you keep staring on the screen and you keep responding something. So it is on the reverse swing. But of course, if you take safeguards, you are better off. So on the whole, Professor, it has been a very nice collection of thoughts from all these excellent panelists. It was a tremendous follow-up session on what Professor Mervyn King said. And the main theme is treat this pandemic as a catalyst. It is neither good nor bad. But if you leverage technology and work on people, have proper metrics, take safeguards that it doesn't tell on your health and the other intellectual and human capital of the home front as well as the organizations. If you are able to think through and devise an integrated thought process either at the home front or at the organization front, this can be a real catalyst. The concept of value creation and sustainability cannot change, of course, but a new normal, a new environment, and a new context has come for us where these people factor and technology have become more profound. So amidst this profundity, people like us, if we are able to work around and come up with better ways of doing things, I think better things are in store for us. But I have a request to Professor that you being a leader in the domain of management accounting and well connected with people like Professor Mervyn King, you should come up with a global initiative of aligning management accounting with this sustainable development goals and integrated thinking, and take that into a IR level at a global platform. If you can do this at this stage of your professional life, I think the whole world of management accountants would remember you for maybe another 100 years as a very statesmanly move what you have done. This is what I think you can do as connecting the management accounting profession to the new environment. Because all this, what we have all spoken just now, can be on the other side of the coin of a management accounting profession. With that very positive sounding note, I hand over the session back to Professor for his next stage of remarks, or he would like to take up some questions from the participants. I leave it to him, depending on the time availability.
Thank you. Thank you very much, Mr. Raman. I think there are not very many. There were some comments that were made, but I think we need to now wind up due to the next session that's supposed to start at 4 p.m. So let me thank you, Mr. Raman, for very well conducting that session as the moderator for this session. And of course, the last comment that you made that, and I think you've always been promoting that idea of the management accounting to play a lead role. I think we are going in that direction, but we have to see how it can be brought up and how we can really get them to really align themselves in order to go it. And also what Professor Mervyn King mentioned of the Chief Value Officer, where the CFO has now been converted to the Value Officer, and what we should do in that regard. So that's very close to the management accounting role. So I'm sure that with you also being on our advisory council, we can work together to realize your ambition of trying to get this management accounting profession quite close to sustainability and integrated reporting. Of course, we are working very closely with Aditi. I'm sure she would always like to come in, and even Professor Mervyn mentioned that all are coming together. So I'm sure that's a very good method of doing it, which a lot of us were not aware that these things were taking place. IFAC is also playing a very major role. So I must also thank our panelists, because we have both overseas and local, and many Dr. Aditi from the sustainability angle, where you really gave in some very important points for us. And Then from the integrated reporting area, the people who are with us on our judges panel, we have the Professor Lakmika Perra, then also Mr. Graham Terry, the ambassador to IIRC, has always been there with us, helping us and promoting our one, even in the latest 2020 competition awards. He has been helping us a great deal. And Professor Samant Senaratna, who's I think from the university side, where she's also, I know, doing a World Bank project where we are also involved in analyzing some of the companies and finding out the sort of benefits that could be given. So I think once those reports are available, definitely that will help us to see. And of course, on the implementation side, Suresh has been really one of the promoters of the integrated reporting in Sri Lanka with his company Demo, who has been really putting into action and showing others how they should go into and promote the integrated reporting. So we've had, I think, a complete session of the different areas, ideas, suggestions, and commencing with the thought process coming from Professor Mervyn King and followed by our moderator, Mr. Raman, Mr. Graham Terry, Dr. Aditi, Professor Samanthi, Mr. Suresh, and Professor Lakmika. So let me thank all of you for your great contribution to this session, and that we've been able to get all of you together and conduct this session. So once again, let me thank all of you, and also to our participants who have been listening very carefully. And I would also request them to stay on, because in another 2-3 minutes time, we will switch on to a new session and for you to stay on. So let me thank all of you, and please keep in touch, and let's get together when we are going to have our awards for the Integrated Reporting 2020. Thank you and all the very best.
Thanks to one and all.
Right.
Thank you very much.
Thank you.
Bye.
Thank you, Graham. Thank you. Thank you, Latmika. Thank you, Professor Avanti.
Thank you.
Thank you. Thank you, brother. Thank you, everyone.
Thank you, Raman. Okay, right. So I think the new people are logging in. I hope, I think Mr. Adrian Berra is already there. Then
Professor, just to check, you can hear me, right? Because there was an internet connection issue earlier and I fixed it now.
yeah,
You
yeah,
can hear me, right?
I can hear you. Adrian, you like to try whether your voice is okay?
Yeah. Hello.
Yeah.
Is
Yeah,
okay?
I can hear. I can hear.
Right. Okay. Right.
Then Dr. Nilesh, you like to?
Yeah, sure. I hope you can hear me.
Fine. Okay, fine, fine. Dr. Gunruan?
Yes, I'm here.
Yeah, okay, we can hear you. Charita?
I am here.
Okay, fine, fine. I think, oh, Gaini, you're there? No, I can't see Gaini. All are there other than the keynote speaker. Adrian, can you try?
Yeah, I'm trying that.
Then Mr. Ruchira Perra, who's our co-chairman, is also there. Vicky is also not there.
Vicky is in the meeting.
But Vicky, where are you? You are not in our panel.
Gan is trying to reconnect again, Professor. Hello. Hello.
Vicky, can you unmute and...
Vicky is there, I think. She has...
No, she was in the other place. I just got her in. Okay. I think she was in the other area. Gaini is there? Okay. I think... okay. No.
She's just switching. She's going to restart the whole thing again.
Well, other than... Yeah, all are there.
Vicky is on. I mean, she has said.
Welcome. Vicky, can you speak? Vicky, can you speak? Unmute and speak to check your voice. We can't hear you. Vicky, can you kindly talk? Vicky, can you hear?
Professor?
Yeah.
She has sent a message saying that she wants to test the mic. So...
Yeah, that's what I just... Huh? She has to check from her side. Okay.
Hello.
Vicky, can you speak?
Hello.
Yeah. Can you speak, Vicky?
Hello, can you hear me?
Yeah, fine. Yeah, right. Okay. We can hear you.
I cannot hear anything.
Can you hear us? Can you? Vicky, can you hear me?
Oh, okay. Can't you hear my voice?
Okay, now fine. Now we can hear you. Can you hear us?
I cannot hear anything from your side.
I think there is, just check your side. We can hear you now. Can you check your side, Vicky? Adrian Gaini is not there, no? Vicky, can you hear us? Huh? Vicky, can you please speak a few words? Okay.
Professor?
Yeah.
Now Gayani is trying to, she can hear us and see us, but we can't see her. So I told her to go to the email and get back.
No, let me see. She must have gone to the other one. Let me see whether she's
Yeah,
gone.
yeah.
I'll take her in.
She's trying to link again.
No, let me see. I can convert her if she's there. Ask her to log into the other one if she's there. Yeah. Huh?
අනේක ලින්ක් කරන්නලු. ඒක ලින්ක් කරන ප්‍රොෆෙසර්. නෑ කොලේ පුරවන්න දෙයක් නෑ.
Ask under what she has linked. Under what are you linked?
What are you linked under, Gayani?
What is the name?
No, I am now again Professor Ekatayan.
Professor Ekatayan. Okay, he's gone.
I've disconnected the headset. Vicky, can you hear us?
She can hear, sir. Yes.
Professor, can you send the link again to her?
Yeah.
Gayani.
Okay. Gayani, right, okay. Copy invite link ne? Huh?
Invite link also change kan.
Okay, I'll send it now. Yeah, make it.
Okay.
Hello, can you hear me now?
Can you hear me now?
Yeah. Okay, we can hear you.
I'm going to
Probably I have read out. Can you hear me now?
We can hear you. Can you hear us?
Yes,
Okay.
very clear now. Thank you.
Okay, fine. We can start. Dani, why don't you start now?
As we move to the second session of the day, themed the impact of COVID-19 on global supply chain in the next normal, we have an introduction to the session by Mr. Adrian Pereira, Council Member, CMA Sri Lanka, and Mr. Ruchira Pereira, Council Member, CMA Sri Lanka. We're honored by your presence. The platform is yours.
Thank you, Dilhan. Welcome all. Good afternoon. Now, our next session is going to be on the logistics and the transport in the next normal, which is a challenging area. And in addition to that, we have a eminent set of panelists led by Gayani, who was the president of Gayani Dialvis, who was the former president of CILT, Mrs. Vicky from Ku from Hong Kong. Thank you, Vicky, joining from Hong Kong. He's the director of Visilog Asia. Charit Subasinghe, he's the president of John Kills Retails. Dr. Gunaruan from the University of Colombo, and Dr. Niles from University of Moratuwa, whose specialty in the Department of Transport and Logistics. And we have Ruchira, my colleague, who's joining us as co-chair. So since we already lost about 15 minutes, I will hand over the session to Gayani to take it forward. Over to you, Gayani. Gayani, over to you. Can you hear?
Gayani, you have to unmute. Gayani, unmute. Gayani, you have to unmute.
Yes, Professor, I'm going to share the screen. Can you hear me, Professor, now?
Yeah, okay, fine. We can see the screen and hear you. Okay.
Right. Okay, sorry about the mishap earlier. Good evening, everyone. Thank you, Professor Vatavala and CMA, for inviting me to be part of this very topical theme at the CMA Annual Management Conference. Our topic for our session is impact of COVID-19 on global supply chains in the next normal. As we all know, COVID has really impacted everyone's lives and livelihoods, and supply chains have disrupted significantly. And before we go into the disruptions and what has happened because of COVID and what we are going to plan out in the next normal, I thought I'll just give an overview of how the global supply chains have evolved pre-COVID. As we all know, globalization enabled companies to trade across international borders, and our focus in the past so many years were looking at cost. How do we really optimally find sourcing locations for our operations? How do we really manage our supply chains in a very optimized manner? So with that, more and more companies over the last so many years moved out of their countries and offshore consolidation happened. And naturally, it moved to global supply chains moved to countries where the cost of production was low. So China in the process became the factory of the world, and supply chain over the years have really got matured, and this supply chain has become a common norm, and China became a common denominator for all these global supply chains because of the cost reasons. And in the process, we had well-developed transport and logistics services, and also established primary and intermediary supply networks within the vicinity, within China, as well as in the adjacent countries. And that paved the way for countries to access to a growing Chinese market, which was huge. But at the same time, there were other challenges in this offshore consolidation. We all know, even now we are, the trade tension between China and US And these geopolitics also played a part in, moving supply chain back and forth. So we had challenges in really looking at interruptions and all that in the supply chain. So, and also because this consolidation and the distance to the primary market, the supply chain cost also rose over the years. And the second stage of the development in the global supply chain network was distributed offshoring. The companies also realized you have to be closer to the markets, primary markets. So therefore, the supply chain had to be distributed in multiple offshore locations. And with that, India, Pakistan, Indonesia, and Vietnam and the Asian country network developed. And the emergence of a regionally integrated supply chain evolved. And with that, lower labor and supply chain cost options were also found. And this enabled to still keep the market access intact and enable the intra-industry trade across these countries. But earlier we had one, consolidated offshoring location with minimal distribution, but this adds a lot of complexity because coordination became that much difficult, and certain countries, there were infrastructure gaps, and that had challenges for the global supply chains. And that came in distributed onshore. Companies wanted, this was happening before COVID also. Companies were looking at how do you bring it closer to home? How do you bring operations closer to the home because of the costs, pricing costs, and also the distance, and you need to be closer to the consumer markets. Finally, most of the companies really wanted to get completely knocked down kind of products. So semi and complete knockdown products where you import the components and making use of the rules of origin, and then you were trying to do the assembly closer to home. So in the Latin America for America, and closer in the Eastern European countries, closer to the Europe. And with all that, the labor costs, the constraints were the labor costs and risk from changing market access rules, because companies shifting to closer to home, and then US suddenly take on a decision on a tweet saying that we would not give that benefit to that country. So you will be having you had a lot of risks because of that as well. And then onshore consolidation happened. De-globalization slowly, the discussions were coming up on how do we really look at closer to home and looking at the competitive advantage in capital, technology, and resource availability, and also considering national security, cultural concerns, and looking at the domestic market access and the opportunities available. And you had opportunity to upgrade the infrastructure and the industry go advantage. But having said that, because you cannot leverage on scale, you didn't have that scale advantage earlier, the production costs were high. Now, this is what was happening when we were experiencing COVID to some extent. We didn't totally move to that, but this was getting morphed up. But then came COVID, the first reported case in Wuhan on the 8th of December, and WHO declared COVID as a pandemic on the 11th of March. And there was a saying, when US gets a sneeze, the whole world, gets a cold. But this time, the Chinese virus became the flu for the entire world, and it became a pandemic. So we know as of now, as of today, we have 41 million cases, plus million cases, and 1.1 million deaths, and 30 million odd have recovered, and 217 countries are affected. It's a huge, huge problem to the world, and a huge disruption to the supply chain and to international trade. And if you really look at the Chinese share of the world trade, right? Hubei province, where the onset of Corona happened, although they are 1% of the Chinese exports last year, that province had key industries for the world. China was the factory of the world for certain industries specifically. And automotive industry, electronics, biopharmaceuticals, steel, all were having their main operations there. And also, world's biggest active pharma ingredient manufacturing for the pharmaceutical industry, 80% of it is being manufactured in China. That was a huge problem when the pandemic occurred. And also Dun & Bradstreet said, out of the 1,000 Fortune companies, 938 companies have had their tier 1 and 2 supplies were impacted. It was a huge shock to the whole world. And if you look at these numbers, you would see we were in a pandemic, but most of our antibiotics, anticoagulants, and main pharma ingredients, the active pharma ingredients, were manufactured in China. And as of the latest information, you would see, this is the April figure, but across the board in all countries, you see a contraction in regional trade. And that's a huge problem to the world economy. Global trade volumes declined by 20%, huge impacted to lives and livelihoods. And if you look at the emerging markets and developing economies, the annual percentage real GDP change, we have never seen such a negative GDP change happening in countries. I mean, you see in Sri Lanka also in 2020, we are expecting minus 4.6, India minus 10.3, and all these countries, barring few countries who are just having a minor growth, Bangladesh 3.8, you see a huge impact to the GDP, and this is going to make a huge dent in the world economy and to the supply chains. So what did COVID do to the consumers? Consumer behavior changed significantly because of the virus, because we were mostly confined to our homes. We were not allowed to, freely move around. And because of the health scare problems, consumers start to shift to buying things that are really essential. Consumers started thinking mindfully when they were doing shopping. They cut down on discretionary categories like apparel, footwear, those things that we normally don't require on a daily basis. And people in Sri Lanka, for instance, we started, doing home gardening and try to grow our own fruits and vegetables, right? Because we didn't want to buy from outside. And with that, the rise in digital and omni-channel growth happened. Because some of the consumers, especially in Sri Lanka, those who haven't even used smartphones properly for their medical supplies, the very elderly, old age people had to learn to use WhatsApp to order their medicine to their doorstep. And with that, we saw a rise in local networks and growth in the online customer base. And consumers were globally moving to contactless services because of the health fear. And the loyalties were really got impacted, brand loyalties, mainly because of the availability issue, because supply chains were disrupted across the world and products were not available. So consumers start looking at alternative products that were available because that was the necessity. You were mindfully doing the shopping. And people are conscious about the health and the well-being. And therefore, whenever they had to go to the shop to, top up their groceries or vegetables and fruits, you really looked at the hygiene and safety aspect of it, especially one thing that you were bound to do, you were forced to do that because of the regulations, plus you were worried about your own safety. And people started looking at hygienic packaging. And also another finding through McKinsey study was that consumers also looked at whether the retail stores, whether they care for their employees' health and well-being as well. And we saw people didn't travel. Air travel almost came to a grinding halt. And people didn't venture out to dine in. I mean, you could see empty restaurants and people lost their jobs. And all this really impacted the supply chains. And the entire manufacturing industry also had to be operated in a very toned down way. And the idle assets that we had in supply chains, especially due to not many people traveling by air, most of the skies were clear, I would say, because we didn't have, most of the airlines were grounded, planes were grounded. So what the airline industry sorted to was, although especially in Sri Lanka, we don't have freighters. So we use our passenger aircrafts to transport freight, and cargo movement happened through passenger aircrafts, and where the countries where they had the cargo freighters, they use those. And Singapore Airlines, for instance, they use grounded airline planes turned into pop-up restaurants. And in fact, this week they are offering that, and in no time, within 30 minutes, all the reservations were filled up. And the industry actually really looked at critically what is it that they can do to manage the new reality. And not only that, although we were beginning to move to distributed offshoring, immediately, the Taiwanese contract manufacturer for Apple Taiwanese contract manufacturer Foxconn immediately moved the Apple iPhone 11 manufacturing to Chennai. They already had a facility there in Hyderabad and Bangalore, but this particular operation were moved here. They wanted to really have a backup plan as a business continuity measure. So more and more countries are now looking at moving some of the operations out of the China, because most of them have put all their eggs into one basket. But it's not easy. Globalization, it took years for this transition to happen, and pulling the plug off and moving to another location without any infrastructure facility not being there will take a long time, but it has begun to happen now. And Foxconn also have pledged $1 billion in India to set up a new facility in Chennai to expand the facilities there. So already this consolidation is getting distributed. 66% of the North American countries are moving some of their planning to move their operation out of China. 17% of the countries in Europe, suppliers, are planning to move out of China. And in Asia Pacific, also the same story. So we will see a whole new different global supply chain in time to come. When it will happen, time will only tell you. But this is what is happening in the global supply chain environment. So let's look at the next normal in the post-COVID-19 environment. We all know the global trade volumes will set to drop. There is a lot of congestion, and we see a lot of shipments getting stuck in various ports. Now, yesterday, there was communication that the shipping rates will go up because of the extra volume that are getting generated and unable to ship out the volumes that is required to move to different parts of the world. And we have problems, but still, it will take some time for the volumes to pick up until this backlog gets cleared. We would also see in Sri Lanka, we have very well seen that localization. Government has stopped importation and trying to do localization of some of the things. It's not easy because we are a service-based economy and we don't have the infrastructure and the facility to ramp up so fast like that. So we need to really, it will take some time for us to do that. But more and more countries are looking at that to minimize the shock that has happened to the supply chains. We all see geopolitics coming into the picture here. Sri Lanka's strategic location in the Indian Ocean is fast becoming a battleground for global superpowers. We are becoming a sprat among the fighting sharks. We're already experiencing that now. And margins and profitability are getting impacted. We all know companies are really struggling because in the Western markets, the consumptions have come down. and production capacity is constrained because of the challenges that you have. We are already experiencing the second wave in our country. Because of the disruption, the production is curtailed. At the same time, all this is putting a lot of pressure on the supply chains. So margins and profitability will, is severely impacted. So we need to really look at cost-effective way, critically looking at the cost structures in our operation to see how do we really remove the non-value adding operational activities in our factory and supply chain operations, to see how can we manage the operation in a lean manner so that we can fit to compete in the market. And we are seeing the second wave. Who knows? We don't know whether there will be another wave. But with the onset of winter, Europe, they are also seeing the second wave picking up. But we see that in Sri Lanka, and it's very unfortunate. But this is going to be the new reality. We need to really have new skill set and mindset in this new environment. This we don't see in the next, at least by mid next year, we don't see a vaccine coming out of the coming to the market. And on top of that, we are ignoring the climate change because we have other priorities. But because of the various health aspects that we are experiencing, climate change and further disruptions will really come and haunt us in the next normal as well. So we have to be mindful of that. Whatever the supply chain initiatives that we do, we should not forget the climate change and the sustainability aspects of it. But having said that, there are good things as well. Digitalization and automation was on the cards and things were happening around the world. But nevertheless, COVID expedited all this. What people are trying for decades is happened within few weeks because of COVID, because of the necessity. Even in Sri Lanka, I'll give you a few examples. I mean, digitalization of procurement, robotization of manufacturing, and we have to really look at the data analytics-led supply chain management, understand your supply chain management. Do you really know the end-to-end supply chain? Do you have the visibility and transparency in the end-to-end supply chain for you to take decisions? And you see robots being used in factories now because we are unable to operate factories with humans now. That will get expedited. And the drones delivering, especially medicine to people who are old, people who are stuck at homes in the US, that they have started it. So new things are emerging. And data is very important for us to understand. It is going to be a dawn of a brave new digital world. And COVID has really expedited this. We must, although it's something really bad, but we should be thankful to COVID. And this is what happened in Sri Lanka. And our 150-year-old tea in the country, and now I think in 135 years history, tea auction, the oldest auction that we have in the world in Sri Lanka, went into digitalization. So now our tea auction is done in an electronic manner. This is how we used to do. Now everybody, you don't need to get everybody 2 days of the week running to the Chamber of Commerce to do the tea auction. And anyway, we will have, during pandemic situation, you would have had issues, but now you, in the comfort of your office or at your home, you can do that. And this is really happening now. And technology being adopted by companies, electronic delivery orders in our ports operation, and we were struggling for years to get that implemented. You have so many people in the port trying to get documentation approved and all, and that is a huge concern for us. And that actually got implemented during COVID. And our PPP, private terminal operators, SAGT, South Asia Gateway Terminal, became the first Sri Lankan terminal operator to join trade links, to blockchain platform with Maersk and IBM trade links platform, which will give them a big edge over other players in the market in the South Asia. And that will help them to understand, get visibility and transparency and traceability in the end-to-end, operation in the supply chain. And all this is happening All of us are waiting for the vaccine to come so that we can get back to our usual way of working. But unfortunately, we don't see the light at the end of the tunnel yet. Race to the vaccine is happening. 240 vaccines are in development in 13 countries. 40 on clinical trials and 9 in the phase 3 stage of the testing. And Professor Andrew Pollard of Oxford vaccine team was saying vaccine will not come till July 2021. So we have to wait till then. And we have to live with COVID. And how do we really manage our supply chains? How do we live our day-to-day operations? How do we manage our factory operations and really still manage our economy with COVID? And we have to learn to live with COVID. And that is how we need to understand to manage that. And not only that, once the vaccine is produced, how do we get it to the people where it is needed? At least for you to develop herd immunity, you will have to at least have 60 to 70% of the population should contract the virus. And then how many needs to be vaccinated? And it is said that 8,000 cargo jets are needed to transport COVID-19 vaccines around the world. Do we have enough capacity? Do we have enough storage facility? Do we have enough distribution capacity is something that we have to really gear ourselves now. Whether once the trials are completed, do we have the manufacturing capacity in the factories? Logistics capacity, storage and transportation. Do we have enough freighters to do that? Or can we use the plug and play coming into play like we used to do that? Cargo transportation in the passenger travel, because not many people will travel even in the new normal until things come back to normalcy. So we might have to do the prioritization of distribution where it is really needed for vulnerable communities. So we all saw what happened when the onset of COVID happened and toilet rolls the shelves were empty. We have to change our mindset from a just-in-time mindset to a just-in-case mindset. We have to constantly look at, because this kind of black swan situations, this is not going to be the last such uncertain event that we will be experiencing. So we have to be always thinking about what is it that we need to do to manage scenario planning. Business continuity planning must be in place. As I mentioned earlier, 938 out of 1,000 Fortune 1,000 companies, their tier 1 and tier 2 got impacted. Do we know who are our suppliers? Do we know who our tier 1, tier 2? Do we know the origin? Have we really mapped it? What are the vulnerable links in the supply chains? We need to constantly look at that. Get visibility and transparency on this. Otherwise, we will be continuously struggling in our supply chains. So before I end, I would like to rephrase. We all know VUCA is vulnerable, VUCA is volatile. VUCA world that we are talking about, but I want to rephrase the VUCA for the supply chain. My rephrasing supply chain for VUCA 2.0 would be, we have to get absolute visibility on our supply chains. Without visibility, we will not be achieving anything. We don't have the transparency, visibility, we will not be able to quickly adjust to any changes that are happening in the supply chain. It has to be an ultimate supply chain. Whatever that is the best that we can achieve in our supply chain, the best that we need to achieve for that particular situation, we need to develop. We need to collaborate. That is the way forward. You may have to sometimes collaborate with your competition. Co-opetition is something that we need to really look at. And of course, we have to be agile. If you want to really play in this new supply chain that is going to pan out in the new era, we need to really look at these aspects. And in conclusion, I would like to summarize. We need to really reimagine what our supply chain should be, depending on the situation, depending on the product, depending on the markets, depending on the model that we are planning to do that. really understand and map the supply chain, understand the vulnerable links, obtain visibility for that. And where vulnerabilities are there, you reconfigure, relook at how you can reconfigure the supply chain and reset the new norm and build the resilience into the supply chain, because there will be many uncertainties that we will be experiencing in the chain. Even when you are deglobalization, there will be challenges that we will be experiencing. And of course, collaboration is something that we need to really look at. All this will enable us to develop that ultimate supply chain that we really want to make. And I would like to end, in the middle of difficulty lies opportunity. Like in Chinese, crisis is composed of two characters, danger and opportunity. So in any situation, there are opportunities. We saw opportunities, companies who have really latched onto the opportunities like Singapore Airlines, companies looking at the, even in Sri Lanka now, the alcohol, illicit alcohol that we have confiscated is being now used to produce hand sanitizers. Companies who are in the apparel industry have got into the personal protective equipment manufacturing. So we need to really look at what opportunities that come our way, not consider this as a danger and look at it in a negative way. There are new opportunities that are emerging in the new era. If we are ready, we should embrace and become resilient in our supply chain so that our countries can be much better and face the new reality in a very positive way. Thank you very much.
Thank you, Gani. Can you hear me?
Yeah.
Yeah. Okay. Now I would like the panelists just 5 minutes to elaborate on Gani's session, the presentation. Can we start with Vicky? Hello, Vicky, can you hear me?
Yes. Can you hear me?
Yes. Please proceed.
Very good. Thank you. Well, technology doesn't really work all the time, but we are very fortunate to have it work out today. And first of all, congratulations to a very successful conference. I understand it has been very informative. And I would also like to share a few slides of prepared talk. Can you see my screen?
Yes.
Yes.
Okay. Great. Okay. So I'm very delighted to be invited by the conference organizers. And on behalf of CILT and WILET, where Gayani and myself work very closely with, and I'm on behalf of Visalog Asia Limited, which is a company that provides technology solutions for supply chains enterprises, to share some thoughts about this new normal in the post-COVID time. Okay, as many of you have already understood from Gayani's talk, the demand of everything has been changed quite substantially, especially consumer goods. Luxurious item is not really in demand anymore. Very weak sales, except for the very basic PPE type of items. Short-term demand spikes has been killing because the inventory strategy has not been catered for the short-term demands, the spikes. And how can we cope with it in order to capture the sales and not losing it out because of lack of inventory? And we also have seen the shift to online from brick and mortar. It has been a very substantial change logistically because the distribution method is very different and the capacity required is different. With the new normal post-COVID, we have seen consumer has new preferences. We don't spend on items that we want to have, but we rather save the money and only spend on items that we need. So in a way, the basic items are more in demand, but the luxurious items are not being needed. And also because a lot of people are working from home, apparels, especially pants and skirts, are not selling as well as the tops. Okay, so all of this actually is entailing changes in the supply chain process. And very often we have looked at, well, how do we cope with the changes in logistics, in distribution? But we have very often forgot to take a look from the top down changes. Having said that, what does it mean? We have to review our product portfolio at the very top. That means the product lines that we should be offering, what the market is demanding, and the type of services that they will be looking for from the very top, and then cascade it down through the product redesign and also the customer, the demand side of the changes understood before we can actually redeploy our supply chain capacities and resources. And we have to look at it from the customer ends and drive the changes with our suppliers. So to be more specific, how do we redefine our supply chain? Once we have the product portfolio redefined, then we should first look at how do we segmentize our consumer groups again. Do we segmentize them based on the regional distribution, or do we segmentize them based on the way that they're purchasing? For example, the shift from retail store purchase to an online purchase. And then we also look at the products. How do we distribute and segmentize the products that we would need to offer? Some of the products that we have been offering before COVID may have to be retired, and what are the new products that we need to set up a supply chain for it. And then, of course, every supply chain that we can identify, we should discuss with the business group and the executive and decide on which is the highest priority of the performance attribute that we should focus at. For those of you who understand the SCORE framework, we have actually divided all the KPI into 5 attributes. And they are namely the reliability, the responsiveness, agilities. All of this performance will cost you resources and money to fulfill. We have to balance it against the other 2 attributes, which is the cost and also the working capital's performance. And for the purpose of this meeting, because organizer is more from accounting's point of view, I would also like to advocate an idea for all the accountants to rethink how do you account for the total supply chain cost to operate the new supply chain model. Because conventionally, we may just put in different cost items, but accounting it in a per new supply chain model as the trend in the US and also in Europe. So when we have the new supply chain defined and also the performance attribute and the key performance matrix defined for the new supply chain, then we should look into the process. And I'm sure you're all familiar with this end-to-end supply chain process diagram. How do we start from the very end consumer perspective and drive all the way upstream to determine how the organization should behave, and also how should we communicate with the suppliers, T1 and T2 suppliers, to behave. Then you have the new process to retrain your staff to cope with the changes. One thing that we would like to emphasize is digitalization as a must. going forward. And working from home with a higher percentage of the working hours as would be the norm as well. So whatever new process that you're designing for the new supply chain, please take into consideration of this digitalization, the visibility that it brings to your computer and your mobile phone, and then how can that assist your staff to make better informed decisions on the new platform. Okay, so I hope I have summarized from a strategic level how the supply chain should be shifted and how to be managed with the new normal. Thank you.
Thank you, Vicky. Can I ask Charita to give his comments on the presentation? Charita, are you there?
Yes, thank you very much, Adrian. Let me look at it from a Sri Lankan perspective. I think what Gayani mentioned about the entire the new norm, how it is impacting the overall supply chain aspects, that framework that she spoke about. Then Vicky told us from a perspective of an organization which also is working from Hong Kong, a different country scenario. So let me talk about my specialty will be the retail space, the supermarket business, and the sentiments of the Sri Lankan consumer to some extent. So we just wanted to understand the sentiment, actual Sri Lankan consumer sentiment bit. And during the initial stages, and on the 11th of May, we did a dipstick, and one, as quite rightly Gayani mentioned, their main concern was the health and safety aspect. And health and safety, and with the health and safety concerns came convenience aspect. So they wanted, when that concern came on the health and safety, they were looking at different ways of doing their normal purchasing aspect, and that is where the e-commerce has played a big role. If I am to give you some statistics from the Kiel supermarket chain has been having this e-commerce platform for a while. It was there as a side business, but we see now today, compared to the pre-COVID scenario, we are doing about 5 times more in terms of volume. Of course, the starting point is relatively low, but it shows that people are now moving into that e-commerce space about purchasing, and there is that business, e-commerce business, taking some different shapes and shape in Sri Lanka. You could see that different players have also invested in the e-commerce field. The different, while you have the more established players as well as the small time players also working in that e-commerce place, and in that context, everyone has also seen an upward movement in this area. One thing that also that came through, as Gayani mentioned, was how do you handle your logistic operation? And if you take a supermarket where we have over 6,000 to 7,000 SKUs, stock keeping units, one of our biggest challenge is how do we ensure that the range and the availability is there across our chain. Our biggest challenge today is that, as it was mentioned in by Gayani, there are certain import restrictions which come in. So that meant the fact that there are certain the need to get substitute products to service that customers' requirements. Then also the other aspect is that how do you manage your working capital as well? I think as accountants, one thing is that we would love to have a lean supply chain where it's a just-in-time type of scenario. But the question is that in a rather chaotic or a situation where there are so many moving parts, how do you manage that leanness in that working capital comes into play? So one aspect that we have looked at is that we have scaled our suppliers under a different risk grid in terms of the high risk customer, high risk suppliers who we think there's a bigger risk of us not being able to get that range in, the supply in. We tend to carry a bit more high stocks, while a supplier where we think the risk is much lesser, we tend to not stock too much simply because we need to manage that. So that play comes into play as well. Then also there is also the situation of fluctuating demand. For example, all of a sudden we are told that tomorrow there is a lockdown in a particular lot of outlets, and then we have already while that is happening, there is also the fresh produce which is coming from our collection centers already on the way, where you cannot go and stop it at that time. So how do you manage that? Are you going to have a agile method where you go into reallocation to the other outlets? There is also that ability that there is also going to be that concern about wastage hitting. So how do you manage that aspect? So that agility does come into play. How are you going to do that forecast in more agile situation? Are you going to have previously, if you were working on a 48-hour lead time with your suppliers or with your farmers, today you may not be able to have such a luxury of a 48-hour lead time, but then it might be at best you could give a 24-hour lead time. So it is easier said than done, because that means that you will have to work with your farmers, for example, on him working on a overall forecast and the ability of fine-tune it further. So that will need data. That will need technology in terms of digital tools coming in, order management systems coming in to manage that type of short-term forecasting. So you will not be able to do that forecasting on an Excel sheet or something of that nature, but you will need to have that tools. So that comes into play. This also leads us on a different types of leadership also to be there. The leadership that will be needed in such a change in environment also would need to be leadership which will have to be quite hands-on, aware of the changes and being able to change your play according to what happens. That is going to be important. So that today, now in a short few hours ago, we are told another set of outlets will get closed. So what does it mean? Are you now ready to handle your logistic accordingly? Then there's bound to be some panic buying that is going to happen today, yesterday, and today. If you look at it, there's panic buying. Panic buying would mean it creates a huge impact on the logistics, because then all of a sudden there are huge stock out situations, vacuums getting created. Then how do you manage that stocks to go as soon as possible for the backfill to happen? So all that needs in this chaotic environment needs a lot of hands-on leadership. Agility is the word that I will continuously use. Being able to be agile enough to change your play according to the different scenarios that are evolving. And another requirement also will be to have a purpose. A business purpose comes into play. What are we working towards? Are you working towards, and that purpose becomes that factor that would sort of gel that entire business together comes into play, and of course the value structures that each company works on as well. So I think it's while there are the challenges also, there are also the opportunities that will unfold as well. So agility comes in where you need to be ready to take on new challenges that will also turn into opportunities. I think one question that Adrian was asking me also was that did the larger organizations, against the larger organizations, did the small time organizations work faster to maximize on the opportunities during that lockdown? I think that was a question that Adrian had in mind. I wouldn't say that it was large or small, but it depends on the culture that you build in that organization, which is agile enough to latch on to certain opportunities that will come. And if you are able to latch on to opportunities, you open up a new stream of business into that organization. Because whilst the conventional businesses will get impacted, new opportunities will also arise, especially in the e-commerce field, in different other technology businesses too. So is the organization now equipped to manage that as well? So Adrian, those are my thoughts after listening to both Gayani as well as Vicky, that I wanted to bring a sort of a Sri Lankan business perspective in this regard, Adrian. I think you're muted, Adrian.
Okay. Thank you, Charita. Very interesting. You explained the local context. I think you explained it in a simple manner, including the leadership aspects of the organization requires. I totally agree. The leadership is an important thing, and if they are not agile and ready to move when it requires, then I think we have a huge issue in this current context. And you brought up the point that today's in current scenario that we don't have even 24 hours to react. Yeah. So morning suddenly things come, and we need to, as retailers, we need how the retailers need to take action in a very short period of time. I think that's a very good thing that you brought up. Dr. Gunarwan, can you explain? Can you elaborate on your Dr. Gunarwan? You are in?
Yes, I'm here. Is it possible for me to share some slides?
Yes, go ahead, doctor. No problem.
How can I do that? Share screen?
Share screen. Yeah. I'm muting myself.
Do you see the slides?
We can see, Gunaran.
Okay. Thank you for inviting me as a panelist in this eminent panel discussion. And thank you, Gayani, also for your enlightening presentations regarding the post-COVID new normal. As I was asked to talk about public transportation and its kind of how it faces this new normal, I thought of bringing some thoughts in respect of public transportation and the challenges the industry is facing because of the corona situation. Gayani talked about post-COVID new normal. Right. With regard to public transportation, there are some very, very imminent risks that we face. Let me talk about passenger transportation for the moment, not undermining the freight transportation. It also has faced similar or even worse challenges because of the situation. Now, if you look at the passenger transportation part of it, the first thing comes is the fear of using public transportation. This is coming from the health authorities as well as from the perspective of the passengers, because you tend to think twice before getting into a bus or to a train, fearing that you might get contaminated. So that's the first thing that comes into as a kind of a deterrent factor in using public transportation. And the second aspect parallelly happening is increased use of private modes of transport. Wherever possible, now even the health authorities are advocating wherever you can, you use your own transport mode. And maybe you, whatever you have, like even a motorbicycle, you better use a motorbicycle or a car and then go, rather than trying to expose yourselves to the virus, as well as you don't contaminate the others if you also are a person who may be having that risk of being exposed. Now, what are the kind of implications of this? First one is fuel use. We all know that private transport modes are the killers in the fuel industry. Now, our balance of payments, the biggest problem that we face in our balance of payments is fuel imports, and transportation is one of the main culprits in that. So, with the private transport modes being encouraged more and more, you tend to get this problem more. Secondly, the congestion. Congestion will eat into people's times, and then you may be having more vehicles on the roads, and then you may be standing on the road in a vehicle, but but nothing is kind of moving. And then all economic ill effects associated with your productivity goes down, and then your time economics is going down, and then the accidents and other all kind of associated problems are there. I don't have to explain those things to you. But then as Gaini said, there are opportunities also. Now let me elaborate on that by presenting this this slide in a kind of presentation. Now there is a very tricky balance in public transportation that we use. What is the balance? The first one is supply economics. Now you talk about the suppliers, the railway department or CTB or the private buses. Now supply economics is a very kind of delicate thing. Private buses, of course, people say that they are earning profits. CTB, of course, is not. And then railway is not at all. So you have supply economics as a question. On the other hand, you have socially determined fare levels. The fares are gazetted by the government, and then there is no kind of market determined flexibility in fare levels. Now, this is a delicate balance that you have. For you to have supply economics working out, you need to increase the fares. For you to have socially determined fare levels politically acceptable, then you probably compromise the supply economics. For ages, this delicate balance has been made by this one factor, which is called the load factor. Because most of the buses are overloaded, trains are overloaded, and because of that, you may be kind of, I'm not saying 100% balanced, but this is the most important kind of ingredient which has kept this balance going up, at least up to this level. Private buses, if they are earning profits, that's because of their supply economics is because of load factors. They do lingering, they do kind of waiting in the bus stops and then collecting passengers and then going. All these things is because of that. Now that is that very fact of load factors which kept this balance, which was attacked by Corona. Now, as we explained in the danger, load factors are going to go down. Now, how do we face this setup? Now, that's where other opportunities are coming up. Let me wind up by just giving those opportunities in another slide. These are kind of policy issues that we've got to face if we are to keep public transport industry going. First of all, organizational performance becomes a necessity, and inefficiency cannot be tolerated anymore. So once you have this delicate balance now cannot be met with the load factors, you've got to keep the cost down. You need to make the industry efficient and productive. Then that brings the necessity for reforms. You need to have industrial reforms now, which have been called for since ages. You can't anymore wait without having these reforms done. Because you may be talking about overloading buses. Now buses being overloaded, we could never tackle that problem. Now, obviously, because of the sheer need that the load factors are coming down. So there is a kind of a positive aspect of it. But the problem is the moment the load factor gets down, that you have this delicate balance being imbalanced. So the question comes up is how? Less load factors, and still the bus industry or railway is going, then you need to rethink about the fares. So fare structure is now getting questioned. Now, the moment you start questioning the fare structure, if it is politically determined, then comes the next thing in the procession, which is subsidies. Now, subsidies becomes necessary. Who is paying subsidies? That's the government, which has to come up with the subsidies to public transportation. So more subsidies. The next question is, who is going to pay for the subsidies? The subsidies are paid by the treasury, means the poorest of the poor in the society are going to be paying for this. But it is not a sin, because we are talking about poor man's transportation, buses and railway. And that is where these are not easy choices for the policymakers to make, but these have to be made. And this is where I think the intervention is necessary, probably to rethink the whole perspective afresh and see the subsidies probably are going into the highway sector. Now, highway sector is one of the sectors which eat into a lot of public sector subsidies. Though we are not talking about the RDA as a loss-making entity. Nobody is expecting RDA to earn profits, but RDA is basically a subsidy-driven organization. But railway, people are talking about railways is loss-making, but nobody is talking about railway is bearing the infrastructure, the bridges, the culverts and the signals and the stations and the station masters and the train control. Now, for the road user, the private car user, you are giving even the cop free of charge. Even the road payments, culverts, bridges, everything is free of charge. Now that is a killer subsidy in this society, and the subsidy paid out of the poor man's tax revenue to the rich automotive user. Now this is a question. These are not easy choices now. The government is faced with those. If you want to protect the public transport industry, and if you want to not run into that critical situation, these are now unavoidable policy decisions which policymakers long ignored and sidelined. Now they are faced with this situation. Let's, as professionals, probably get stronger and canvas for this even at this stage. Thank you very much.
Thank you, Doctor. This was a very, very interesting and thought-provoking presentation. Can I ask Dr. Niles to comment on the presentation and the speakers, please? Dr. Niles?
Yeah, sure. Thank you very much for inviting me for this session. It's a privilege to be among such an elite panel. So I'll basically share some thoughts, basically tailing off on what Ms. Gaini presented and what the other panelists have already put in. So when we were transitioning into the new decade from 2019 to 2020, I think there was a lot of talk about supply chain strategy, about the vision 2020, as some people wanted to say, about how things are going to pan up over the next decade. But what essentially came out was something unforeseen in many ways in modern days. If you really look at it, I think many supply chains started experiencing a lot of scarcity in demand. Whether the apparel chains which were struggling to convert their work in progress to finished goods, or whether the toilet paper was, as they were dubbed in Australia, where people were fighting for reels of toilet paper. So there were lots of problems which were basically propagating across the supply chain. Now, I think one of the things, since that it was already touched, I wouldn't really go into the nitty-gritties, but if you really take the last 2 decades of supply chain, majority focus has been on lean operations, on just-in-time. And it's also important to notice that at a certain period, especially about 15, 20 years ago, there was sort of a line of thinking that was assuming that lean operations or just-in-time is a panacea, that it's the gold standard that any supply chain ought to go ahead with. I think over the last decade, that notion has been questioned to some degree with the Fukushima disaster, the floods in various parts of the world, natural disasters, and so on. I think this pandemic has sort of brought back agility to the front line. So having an agile supply chain seems to be the gold standard now. Maybe what we are into 7 months of the pandemic officially being announced by the WHO. So since then, it seems like that we are moving into an era of agility. I think Mr. Subasinghe very correctly mentioned about how difficult it is for supply chains, because there's so much fluctuation in supply as well as in demand. So it's very difficult for a forecasting system, as well as in terms of managing inventory, to take all of that into consideration. And from a customer's perspective, especially if you are going to a retail store, you want to see shelves which are packed. You don't want to have walk out empty-handed. And at the same time, there is also this problem where from a retailer's perspective, you don't want to stockpile, and you don't want to have overage costs where there are products which are going to waste. Because if you're expecting excessive demand, and if that does not translate into actual demand, there's always going to be a huge pitfall. So I think one of the important things I want to add to the conversation is about resilience. I think resilience is something that we want to sort of cap it off in terms of the supply chain. So my major thought process revolves around 3 critical points. I think visibility is very important. Visibility in terms of data visibility along the supply chain, having an understanding about who are the other suppliers that are there. You would have probably worked with certain suppliers for 10 years. But who knows, maybe the supplier would have to shut down out of the blue if there is a problem with the pandemic. I mean, obviously, these organizations, they always try to take the best measures they can. No one wants to spread the virus purposefully, but there have been many cases where there have been international and even local companies which have unfortunately had cases where there had been a spike in the number of employees contracting the virus, which has actually led the organization to shut down. Unfortunate, but this seems to be the new normal. So as a result of that, supply chains need to know who are potential suppliers that they can work with, and on the other side of the spectrum, who are potential customers that they can possibly work with. And in addition to that, I think there should be a lot of awareness about inventory. What is the inventory levels that are there? There should be proper auditing about what's in the system, what's in the pipeline, what's how many products are on order and at the factory or on its way from China or somewhere else. So these are very important. Understanding the challenges, the lead time would have changed, obviously, as was picked up earlier. So you might be getting a shipment within a matter of few days earlier, but nowadays you can't take that for granted. So all of this relates to visibility, having that visibility. I think that's what Vicky touched on, having a really solid digitization where the information flow is seamless, so that there can be seamless decision making which is based on that. And I think from a very I mean my forte is mostly in forecasting and inventory decisions. So I think traditionally we always talk about the human factor, and we always, I mean, one of the biggest discussions in academic literature is about having this mechanized system, sort of like a forecasting support system or a decision support system or a numerical system against the value that a human being can bring. So I kind of feel that there is a lot of value that humans are able to bring in the current context, because this is something that has not been experienced to this scale for quite a bit of time. So I think that presents itself a good opportunity for professionals who have that capability to sort of understand these fluctuations and try to make sure that they take decisions based on the visibility of information that is there. The second point is something that we have already touched to some degree, which is agility. I think one of the speakers earlier, if I remember, both Ms. Gayani and Mr. Subhasinghe both touched on this point, the agility being a critical component of the supply chain. So in order to be agile, you need to have backup plans. You need to have various, plan A, B, C, D, and so on. Lean operations or just in time does not really allow that. So I think this has given an opportunity for the supply chain community to really think on their feet and try to be a little bit more proactive in understanding, what they need to do. There were several examples presented on how certain companies, both local and international, tried to overcome this problem. And I think that is something that we need to continue to have. And that is the only way we can respond to demand. Now, what we are experiencing this week, it's been a bit of a tough week. I think, everyone's sort of looking at their phones, looking at news, listening to the radio, trying to figure out what's going on. And I think earlier this morning, there were 5 police areas which were put under curfew. So when there are certain things, you need to have a clear, as a business, you need to have a clear plan on how you're going to continue operations. So when we had the initial curfew, when we had the initial lockdowns, not just in Sri Lanka, but across the world, it was a new experience. But right now, I think some of these organizations have already matured and sort of come up with certain solutions to maneuver through this sort of, what I would say, a minefield. And even in such a case, you would have to redirect shipments. I mean, you have to have that agility. Now, for example, when there are certain areas which are having curfews, if you are having a distribution channel, you might have to sort of, if the products are perishable in certain cases, you will have to sort of come up with mechanisms so that you don't really incur a cost. You don't have to write off those products. You'll have to somehow manage it in such a way that, you know, it doesn't really add a burden to the bottom line. So agility is very important. And the third one is resilience. So resilience is, I think, it's mostly based on, you know, some of the literature that is there, academic literature. It's sort of like a culture. So what really should come into play is, you know, organizations should always try to, you know, think about what is the optimal operating context, what is the buffer stock that they should maintain. Now, these are very challenging times because, you know, traditional normative methods would not do the trick. I think it was earlier mentioned that Keels carries about 60,000 SKUs, stock keeping units. So imagine doing that on a regular day. Imagine calculating the buffer stocks and making sure you maintain high service levels on a regular day in 2019, right? So the problem has become much more difficult, not just for the retail chains, but for the entire supply chain. Because if you're running out of one single important component of a product, the entire supply chain comes to a standstill. So you have to have the resilience to, you know, ensure that you have the right buffer stocks. And one of the important things is, now I think Ms. Gayani emphasized about onshore, onshoring, offshoring, and nearshoring. So there's a lot of emphasis on localization, but at the same time, I think in certain contexts, you have to always think about nearshoring and offshoring too, because there are cases where certain products might not be readily available if there's a breakdown. Now, one good example is in the United States a few months ago, there was a major problem with one of the largest pork manufacturers that were there. So one of the piggeries in Minnesota or Iowa, I can't remember exactly, they had a serious problem and they had a serious issue in terms of, you know, fulfilling demand. So the shelves became empty. So in such a context, you need to have a strategy where you will have, you know, maybe not localized supply, but international supply. Now we are also having that problem with one of the most important ingredients, one of the most important spices of our traditional cuisine, turmeric powder, right? So we have most of our people are struggling to find them, and that's a serious problem. So resilience is very important in that nature, so that you have a mechanism or a strategy or a risk management plan to ensure the continuity of the business. And that all doubles down to life, our regular life as well. Because if we don't have the basic ingredients to sustain our lives as human beings, there will be serious problems in terms of life quality, mental health. You know, there will be so many other health related issues that may come up. So there's a lot of things that, you know, we have to take into consideration. So I think VAR, very easy to remember if you are a football fan, VAR, visibility, agility, and resilience are, I think, the three key concepts that are important going forward. And I think it's also important for the professionals to take informed decisions based on the information that is there. So it should be data-driven decisions, which are based on whatever the information that is already visible. And it should also go into the domains of collaboration. I think the term competition was floated earlier. So you might have to work with traditional competitors that you probably would not have thought of working with 7-8 months ago. But that's probably the direction that we are headed to, especially with, you know, there being no sight of the end of this pandemic. And I think there is also a lot of room for decision makers in terms of, you know, honing their intuition and taking the right decisions based on these information. I think that is one of the important ways of, you know, navigating through this minefield and, you know, achieving success. Now, I want to cap off by bringing another very important point. I think one of the things that this pandemic has done is it has taken center stage. But there are lots of other problems which are really persistently troubling supply chains, which have been doing that for quite a bit of time. Now, if you take geopolitics, if you take sustainability, if you take, you know, the wastage that is happening, if you take social issues that are there. So there have been a lot of other factors which have, which have to some degree hindered the progress of supply chains. So I think in a certain, I mean, in this point right now, we are mostly focusing on the pandemic, but we should not also, focus out of those other factors, the other exogenous factors, which are also very important. There are lots of geopolitics that are playing around in the world, which are affecting the supply chain. Trade wars that would be there, certain conflicts that are, happening around the world, even during this pandemic, which are not getting that much of limelight in the news because of the pandemic. The sustainability concerns, the climate change concerns, all of them should also be managed and mitigated within the domain of the pandemic. So I think it's a tricky challenge, but I think with the right human resource, with the right attitude, and with ingenuity, I think this is something that we can easily, well, maybe not easily, but with some difficulty, with some effort, this is something I think the business community and the world at large can overcome. It requires ingenuity, it requires new thinking, and it requires, maybe thinking outside of the box, trying to move away from some traditional forms. So this is basically the initial ideas I'd like to encapsulate.
Thank you, Dr. Niles. Thank you. That was very interesting. On ingenuity and all that. Ruchira, do you have any comments? If you, Ruchira, are you there? Ruchira, you have to unmute. Unmute it, Ruchira. Can't hear you.
You have to unmute, Ruchira.
Ruchira, you have to unmute. Ruchira, can't hear you, Ruchira. Yes, you have to get the mic closer to you. Yeah. Ruchira, still it's getting resonating.
I think he's
You get the
sound
mic. Get the mic closer. Okay.
Edwin, can I pose a question to the panelists? I have a question.
I'll pose the question. Okay.
No, I have a question which can I ask? One?
Yeah, go ahead, Professor.
Yeah. No, actually, I think the presentations are very good. But as management accountants, what we are really involved in the cost and management accounting area. Now, even Professor Gunuruan mentioned about the subsidies and others. But what I really see is that I think you have said this at the correct management accounting conference, because we are really the people, the profession that are going to look into and do the costing of a product. This is not seen in many of the institutions. Even what was mentioned by Dr. Nilesh, the same thing is there on the supplies, the cost. So I would just like to get maybe comments from them, even in the retail trade that is there, because some of them really don't know how this cost is made also. So our profession now, we have set up what is called the Cost and Management Accounting Standards Board, and we are planning, we will launching this very soon with the standards for every, even for the transport sector, so that then they will be able to have a maybe a body that will really tell them if you calculate your cost this way, and then that would be something that is accepted by the government. So I'd just like to have some comments on that.
Dr. Gunuruan, can you comment on that? And you're also an accountant.
Well, I thought that you did not know this, that I was an accountant. Well, I think I fully agree with Professor Vatawala. The problem is that we know everything other than how to do costing. That's the whole trouble. So when the question of cost is not asked, that's where you cross the line of inefficiency in most of the cases. And that's where you tend to go and develop so many things which are not digestible to the economy. So I think if at least the management accountants can come forward and develop this these kind of benchmarks at least, and that would be quite useful in decision making by the policymakers and planners. Now, for instance, if we are talking about certain kind of procurements, mainly when those things were questioned in at many forums. The problem is that when you don't know the benchmarking ability, on the one hand, there is no way of benchmarking. Number two, that you don't go for competitive bidding. That's a clear recipe for you to go into kind of excessive project costs. Now, at least if you are going for competitive bidding, then there is some kind of control, at least at the bidding level. But even for bidding documents, if you don't know what the engineer's costs and engineer's estimates, and then you are in trouble. So I think Professor Vatavala is 100% right. Key element is efficient costing. So we need to have fundamental costing put right in these kind of exercises.
Thank you, Doctor. Dani, the question to you.
Vicky raised her hand.
Adrian, can you hear me now?
Yeah, okay, fine. Okay, go ahead.
I thought of Adrian to summarize the presentations maybe after the question and answer session. What do you want me to do?
Vicky?
Yes, I would like to supplement. Actually, there are a lot of hidden cost items in the conventional way of accounting costs for the operations. And we have actually spent a few years of time to redevelop the cost modules to account for the cost involved per supply chain. And in my earlier presentation, actually, there was one slide that on the cost factor, we have actually developed a 3 levels cost accounting framework that you may want to take reference, because those are the framework that Fortune 2000 companies are establishing nowadays, so that you can make quick management decisions whether a supply chain is making money or making profits for the corporation, and which are the supply chains that you may really want to scrap and spend the resources somewhere else. So I want to supplement on that.
Professor, if I may add also another point there, I think this has to be done as a joint effort. A supply chain together with the accountants must work together, and they must act as business partners. So when you are in the business together with them, then you can work and understand the nitty-gritties of different cost structures and understand the real theory behind that and explain to them. Sometimes, if you are not fully aware of the whole process, then you may not be able to capture all the costs that are there. They may be hidden. Sometimes when you're taking decisions, you may not capture all of it. I think business partnering concept will really help. I think most companies are adopting that. And if you partner the operations, then you will be able to capture all the costs and then give a meaningful input to the operations.
I think, Gayani, what you say is true. We are really getting the inputs from the various organizations. It's really not only supply chain. Now, like what Professor Gunruan said for the transport sector, you see, if one is setting the price of the transport for maybe how much you can charge for a bus ticket, you have to do a real cost, you know. So that's why I say, then if the government is deciding a price, then the balance, when you work out the actual cost, the government must give the balance as a subsidy. Now this is really seen. So maybe the transport sector is one area. The other one is the Ceylon Electricity Board. If you really look at it, you may find that as a result of the government pricing, their actual costs are entirely different. So the whole system of what he mentioned of efficiency, productivity, all these things are forgotten, you know. So that's why the government has to seriously look at this, and this COVID-19 impact now, even for Charita, for his retail, I think the cost is the most important because they are having very, very small margins. So unless they cut their costs and do it, they will really be in very, very big difficulty.
Charita, you're there? Hello, Charita, you're
very much.
Yeah. Any comment on
Fortunate, I think as a retailer, one of our biggest challenges is that unfortunately, in our business, we can't pass on all the costs to the consumer because there is a MRP on the products, and it is only and just because our cost goes up, we are not having that ability to comes into play quite a bit. And what has also happened, the opportunity that came about. Now, let me explain to you. Knowing that our turnovers were not going to be as vibrant as the pre-COVID period, what we also did was that we had to work backwards to understand at that turnover what was the cost that we can take, and to that extent we are going into absolute detail on the resourcing of that processes. I think that although it is not directly linked with logistic operation, working on what we could afford for that turnover came into place, and then you work backwards to see on that context what are the elements that you need to work on to ensure that you are still able to retain the profitability. So the productivity is also, I think, in this context, in a conference of this nature, productivity also has to work with less. If you take the work from home concept, now what happened was the work from home concept, actually, when you look at it, now it was something that people were, as leaders or management gurus, we have been always talking about flexi time, work from home to all that stuff, but we never really had that will to trial it out. But what also happened with this COVID situation is that we were forced to work from home, and that brought a different dynamics in this working thing. And you find today, and I think that will be relevant to Professor Gunaruan's studies on the transportation aspect as well. If a certain percentage of people does work from home, the impact on the logistics of people having to travel into the city also could be minimized. Now that is that macro thing that is also going to come through this COVID situation, and that will help us to also. I mean, if you look at it, I'm sure probably Dr. Gunaruan is much more competent to explain that aspect. But if you look at the transportation into the city, I think if it can be reduced by people working from home, that is going to have a huge impact on the logistics, the transportation, the public transportation, to all that. And just imagine the time that you're going to spend less on the road. That hour upward and backward another hour, that 2 hours is significant. And that gives you a different dimension to our ways of working, productivity, to all that aspect as well. Now, these are the elements also that we need to really think through, work through, and look at as opportunities that are coming from this virus as well, into reset our thinking on those aspects as well. So Adrian, that would be another element that I would want us to start thinking in terms of this cost aspect as well.
Right, Charita, thank you. Dr. Niles, do you have any comments on that, on the cost aspect?
Yeah, I think.
And how Dr. Niles?
Yeah, I think a couple of things. I completely agree with that. I think, by ensuring telecommuting and ensuring, various other flexible working practices, not only transportation related costs, but it is also good for energy as well, because, as we all know, transportation, not just transportation, but even an office space or any institution takes quite a bit of energy. The consumption is very high. And all of that comes at a cost on one side, and there's another cost, which is an impact towards the environment. And I mean, to some degree, these can be mitigated. I mean, no matter what we say, no matter the efforts that have been taken by various people, we always see at, especially at government institutions and even at private sector companies, there are, you know, unwanted lights switched on, air conditions running 24/7, things like that, which actually accumulate along the costs. So that is something that we can, to some degree, cap off and get some rewards from an organizational perspective, and it actually translates into the national, you know, the national cost aspect as well, because we spend a lot of money. I think Professor Gunarwan would know the exact numbers, but we spend a lot of money on subsidizing electricity generation, especially when we are buying from private sector, and also in terms of importing fuel. I think in addition to that, I think one of the important things is this traditional supply chain model of, you know, the news vendor problem of the underage cost and the overage cost. You know, how to manage that dichotomy. You know, how do you really hit that right point? If you carry more inventory, there's going to be inventory costs. There's going to be a lot of problems that, you know, trickle down the supply chain. So when we are having an agile supply chain, this is a real problem. But we, at the same time, you can't have an underage cost where you are having, you know, you are carrying a thin inventory level, where the customer is, you know, waiting for the products. Especially if it's an institutional buyer, they would probably go and find a different supplier. So I think one of the important things is trying to mathematically find that right balance and have a mechanism where we try to reduce the lead times. Because if we can reduce the lead times, the carrying cost can be reduced. So when we reduce the carrying cost, the working capital that we put on, you know, holding inventory, the money that will be tied up for work in progress, for inventory, for pipeline inventory, and all of that can be brought down to a manageable level. So I think that's one of the places that a lot of emphasis should be put on. You know, if you're expecting the lead time, you know, if the traditional lead time was 72 hours, you need to try to invest in technologies where you try to bring it down, maybe cut it by half, maybe even less, so that you manage to run at a very lean model when it comes to those sorts of costs that are there, especially the overheads and the operational level costs. These are things I think that can be mitigated to some degree with proper planning and through effective decision making.
And I also comment on those.
Go ahead, Doctor.
Well, I think I appreciate both these comments coming from Charita as well as from Professor Vatavalla. There are three important pillars in managing the transport sector problems, particularly passenger transportation. Now, it is much appreciated that transportation is not for the sake of transportation. Other than leisure travel, other than the travel that you enjoy for tourism or whatever, people don't enjoy traveling. No, so traveling, if you really want to, 90% of our traveling is basically not for traveling per se, but for some other thing. So demand management has to be a key. I appreciate very much Charita's comment there, and the government has to put a lot of effort, a lot of emphasis in managing the transport demand. There are many ways of doing that. One is you know, working from home as suggested, and there may be other IT communication solutions that may be you know, introduced, and also you bring the utilities to the places proximity to your residence, and then your travel demand may be brought down. So that is number one, for the first pillar for transport as a solution for transport. The second one, however much you try to manage the demand, there will be some travel demand arising that has to be met with the lowest cost. That's where Professor Vatavalla's issue is coming up. So let's say you try your maximum to control your demand. Whatever you got to supply, meet it with the least economic cost. So there, you know, you should know the cost, and then those costs of different alternative modes, You discourage the expensive modes and encourage the cheap modes. And if anyone wants to go in the expensive modes, let them pay the true cost out of the benefits that they derive. So cost management and management of the supply at the least cost is the second pillar. There is another pillar, that is, okay, whatever it is that you got to meet some cost. You can reduce cost, but then that is not coming down to zero. Try to make that cost, whatever that cost percentage, let's say X, try to make that cost becoming fertilizer for your own local economy. So try to prevent leakages out of the economy as much as possible. Transport sector is one of the culprits in that also, because most of our transport activities is generating business to offshore producers. You take fuel, you take vehicles, you take spare parts, you take anything other than the drivers, everything almost is import intensive. So the problem is we don't use our transport industry, whatever that we have to. We can't manage the demand indefinitely. We can't reduce the cost indefinitely. So the remaining part of your cost that you got to make sure that is becoming, fertilizer to the economic paddy field. So that is those are the three policy pillars we suggest to the government, and we have been suggesting to the government for so long. And unfortunately, since the days of our pioneer John Diendas, we have been saying this, and it has not been adequately heard. And just I will close down with I will close my intervention with this small, maybe positive news, that a new effort of developing a national land transport policy has just concluded, and the report is with the Ministry of Transport. All these three pillars have been very much emphasized there also, and let's hope that the government will take it forward from that. Thank you.
Thank you, Professor. That was very interesting. Now we are almost, we are just 10 minutes away. So before I will, because in the interest of time, I will ask Ruchira to wrap up. Ruchira, can you hear me?
Yes, Adrian, I can hear you. Can you hear me?
Yeah.
Yeah. Adrian, thank you very much for the moderation and also for the main speaker, Gayani, and also for the panelists. Thank you very much for your participation today. So to wrap it up, if I start from Gayani's presentation, she has basically explained the change in consumer behavior from pre-COVID to post-COVID, and also what we can expect in next normal. And also, I very much like explaining of digitalization and automation trends. The new digital world, where she has mentioned that we'll have to expect basically digitalization of procurement, robotization of manufacturing, and data analytic-led supply chain management, which was well noted, Granny. Also, thank you very much for giving a new definition for VUCA, VUCA, where you have mentioned visibility, the ultimatism, in the sense that whatever the best to the companies that we have to do, collaborative. I mean, rather than competing with each other, it is maybe high time that we collaborate with our competitors, and also the need for being agile. I think the same thing has been mentioned by Dr. Niles also. He has taken, I think, three things in his definition: visibility, collaboration again, and also being agile. Vicky, I think she has correctly mentioned the need to look at, in addition to the supply side perspectives, also demand side perspectives, which is very correct, because as we know, due to COVID-19, so many things have been changing, especially demand side parameters have been changing. So in addition to supply side perspectives, we need to consider demand perspectives also in order to come out with holistic strategies. Thank you very much, Vicky, for your contribution. Moving on to Charita. I think, Charita, you may not be aware, in our recent case study, I mean, we are an education institution. So in our recent case study, the case study was based on retail industry. And one of the companies that we have selected was Skills. So actually, most of the things that you have discussed, most of the things that you explain in your presentation, also in answering the questions, we have basically been discussing in the case study discussions. And also, I think our students, through the discussions that we had, and also through the researches that they had done, are quite aware of what to expect in the retail industry. But also, I mean, coming into what you have mentioned about the need to be agile. Yes, fluctuating demand, the demand side challenges, and also the importance of agile leadership. The importance of agile leadership to make certain decisions is well noted. Dr. Gunaruwan, in your presentation, you have mentioned about the challenges in public transport, where you have mentioned that there are two main challenges. One is the fear factor of using public transport, and also the increased use of private transport methods, due to which we will be having so many other issues such as increased use of fuel, congestion, and also economic ill effects. And also you have mentioned that we need to balance the load factor. Yes, that is well noted. Basically, the importance of balancing load factor to be fair to both supply side economics and also to have fair policies for the passengers and also for the government. Dr. Niles, in your presentation, again, you have mentioned about an agile supply chain, the need for an agile supply chain, and the impact of fluctuating demand and supply. I think the same point mentioned by Vicky in her presentation. Also, you have mentioned the importance of human factor to understand the fluctuations in order to make better decisions. And as I have earlier mentioned, you have defined VAR, visibility, agility, and also resilience to come out with winning strategies in order to face the challenges posed by COVID-19. So overall, as a finance professional, thank you very much for the contribution of all of you. I mean, it was very insightful. I learned a lot as a finance professional. And with this remark, I would like to hand it over to Bilhani.
Thank you, Mr. Richard Pereira. May I invite the President of CMA Sri Lanka, Professor Lakshmana Vatabala, to give away the concluding remarks.
I think I must say that we have really listened to very, very not only informative, but also thought-provoking. There are new ideas that have come up, how we can do this. I think Gayani set the stage for this, and the presentation that she gave, and it was also taken up by the others. And the one main thing that that came up, that is of course the practical side, where Charita was speaking on, and then of course two university Professor Gunaruwan, and of course from the Moratuwa University on the supply chain, we had Dr. Nilesh. I think they really have done. I'm sure that you mentioned the name of Mr. Dian Das. I think he was one of our chartered accountants who was really in the trying to push the financial accounting and financial discipline. But I don't know whether he really went into the cost aspects, because financial aspects at that time, it was only financial accounting, but it was only in 2009 that we set up the management accountants, and now it is a body incorporated by Act of Parliament, where they have the power to set standards. So I think the government took it to Parliament to set it up, and we really have to do this. And cost is something that really came up as a result of COVID-19 pandemic. Now, Gayani mentioned about the tea auction. Now, you see, for how many years, 130, 140 years, 50 years, we were doing that. But due to COVID pandemic, within maybe a few days, they were able to just put it on. But of course, Chilean Chamber of Commerce was making a lot of money. They have lost it, but it is maybe again for the a convenience where technology has come in. So there are a lot of things that have happened. I'm sure this transport sector is one area. Like Charita mentioned, you can work from home. Actually, if you look at the number of public servants who are coming for work, if they come maybe 2 days to work and 3 days they work at home, then definitely, especially the railways will not have a problem. They use the railway very much. So I'm sure Dr. Gunaruwan can, Professor Gunaruwan can maybe recommend this, because he's, I know he was handling that area and expert in that area. But one also must look into one area, because the government must realize that they should know how to work the actual cost. And if they decide on a price which is maybe lower, then the government must give a subsidy. Now that is not happening. As a result, the organizations are becoming inefficient. So this is something that we need to look at, because in the private sector, definitely they will not allow that to happen, because if one of the, maybe if you ask Charita, he will say maybe depending even on the products that they buy, if they have to sell it at a loss, I don't think that they will do it maybe continuously. Maybe with the current COVID-19, there are certain things that are happening, but not continuously. Then I think from Hong Kong, Vicky, I think you really told of the digitization that is taking place, the sort of actions that have been done, which is very, very good. And also you told about this package that you are having for costing. We'd like to have a dialogue with you on that matter, because definitely that's something that we can work with. As Zagani mentioned, we have to discuss, we have to work with the sectors. Otherwise, it's not possible, because even on the transport sector or the electricity sector or whatever sector that is there, we have to work with the people who are using it. So this supply chain is something that is very, very important. And Dr. Nilesh is teaching it. I don't know if it is a graduate level or MBA level, but if he is doing both, it is very, very good, so that the people will get to know, and also the knowledge, we will have knowledgeable people in these areas. So today this is the concluding session, and I must thank all of you for readily agreeing to come, spending your valuable time. I do hope that to the participants, you have given them a lot of input, and maybe even from your own side, that some of the matters that were taken up would also give you some thought as to how you can do it. In fact, I think there was a question as to find out what the universities are doing to promote supply chain. I'm sure Dr. Nilesh, you are doing that in a big way from the Mortua University, and maybe on the economic side, where Professor Gunruan is doing that, and on the practical side, where the investors and others are doing. Then, of course, our chairman, Mr. Adrian Perra, I think he is a very, very experienced person in this. He's our own council member, and did a very, very excellent job. So let me thank Adrian for that very, very good session that you conducted, and of course the co-chair, Ruchira, for the excellent the summary that you gave, which covered the whole thing. So finally, I must also thank our compeer who has been doing an excellent job. And of course, our own staff, I think Ms. Shanti, together with her staff, have been controlling this situation. And you know that this is something that is new. We have been doing, this is the first online conference we are doing. And normally if we are doing, we are charging 15,000-20,000 rupees per person, but this time we gave it free of charge. So it's something as a result of the COVID-19 pandemic. People are getting a lot of things, value for money is there. In the first session, we discussed about how to create value, and today we are giving value for money. So let me thank all who have contributed to the success of this conference, and I'm sure that we have all gained a lot, especially the participants who have been there in large numbers. And let me finally say a big thank you to all of you, and that we should keep in touch, because I think that's the way that we can take gain more knowledge, and also be where we can serve the people. I think that's the most important thing that we have to look at, how we can provide our services to the people, to the government and others, so that they will benefit from it. So thank you, and all the very best. And we hope to see you maybe next year at our next conference, or we are planning one, I think, with what Professor Gunruan mentioned, the cost congress we are planning. So we will invite all the sectors, so that we can get the ideas as to how we can work on this cost, reduce it, and manage it, and give the lowest cost to our customers. Thank you, and all the very best.
Thank you, Professor. Good
Thank you,
night.
Professor. Good night.
Thank you, Professor. Thank you.
Thank you. Thank you, Gani. Thank you, Vicky. Thank you, Ruchira. Thank you.
Thank you, Professor.
Thank you.
Thank you, Professor Gunruan. Thank you, Dr. Nilesh.
Thank you. See you.